Right, this is actually a very interesting concept that I'm not even sure how I found out. It just kind of made sense in my mind. Maybe I watched an ICT video on this. I genuinely do not remember. But you guys have all watched the change in state of delivery video, hopefully. And I mean, this was just a rejection block porn, but more on that later. So we have this change in state of delivery, right? We have this up close candle that gets closed below. And why is this a good order block or change in state of delivery or whatever you want to refer to it as? Well, always when you look at these time frames, you got to scale down in time frames to kind of validate the PD array. So for order blocks, what I like to look at is, do we have an imbalance inside of this order block? What that means is, like, these candles, right, on the 15-minute chart is the 1 hour order block. What do we find inside of this 1 hour order block? We find this 15-minute imbalance, right? That's what makes this a good order block. And that's what makes it not random. Because you can choose any random order block and it's going to get raped. Also, obviously, this 15-minute order block is what price really referred back to. So, you know, you got to be smart with your entries in this. I don't know if we can. Oh my god, bro! I hate when you change time frames. It just fucking puts you somewhere else on the chart. Fuck you, trading view. Oh my god. Okay. Right. So fib, referring back to the fib, this is why I love the fib. You can usually find exactly, like, if you go order block and then you scale down in time frames to find the imbalance, and then you can use the fib on top of that to actually find where exactly we're gonna tap and reverse. So here you could have either used 0.705, which is what I would have used. That's what I usually always use. So, wait, fuck, that was wrong. Oh my god. This is like a typical good trade. We got 1 hour order block. We then got 15-minute imbalance, right? Target whatever you want. Just target this low, you know, 50 points, 60 points. Yeah. Edged your stop loss by like 2 points, but didn't stop you out. So yeah, this is like a really good setup. Obviously, if this imbalance was bigger, it would have been better, but still a valid setup. This is why I call the channel a nigga. I haven't got to change it though, but it's a really good concept. It's really interesting. This here as well, this 1 hour order block. If we scale down in time frames, if we scale down in time frames, we can see we have 5-minute imbalances, right? Precision, blah blah blah. We have 5-minute inverse imbalances. There's also a 15-minute inverse in this that you could have targeted or entered on or used to validify. Is that a word? I don't know. To confirm that this is a good order block. And then fib lines up pretty nicely. So yeah, just combine like I feel like I'm really bad at explaining. I'm better at showing it, but I think you guys get the point though. Imbalance inside of an order block. You guys know how to find both of those. So you should know how to do this. Then combine it with like key open would have been super nice. Fib is always super nice. Yeah. Like I think a lot of you guys would have improved your win rate if you just focused on the 1 hour and down. Like you didn't do the 1 minute at all. You could have easily done that because like this move, this huge sell off, right? We reach the 0.5, the discount level of this huge leg. And then we create this 1 hour order block after we react from it. And then we get all these levels. Oh my god, my phone just fucking exploded, bro. We get all these like imbalances inside of this order block after this reaction, after hitting the discount of this huge sell-off, after hitting the gap fill of this 15-minute fair value gap. Referring back to the gap fill video. Like you could have entered on this as well. Just being fucking ballsy. But yeah. I was gonna say something really important. I forgot. Wait, okay. I should make a. I'm gonna make actually a separate channel on this, but I'm gonna touch lightly on it right now so that you guys can use it. Oh my god, what did I just do? Pay attention, pay really close attention to the 50% mark of inverse fair value gaps. I should make a video on this because it is literally mind-boggling how often this happens. It happened today as well. Wait, let me show you. Just look at this. This happens all the time. Like do 5-minute and 15-minute, those two time frames. You can make a model out of this alone. 15-minute or 5-minute inverse fair value gap, enter on the 50% mark of that inverse fair value gap with a 5-point stop. Look at how often it does this shit, bro. Wait, I'm gonna show you from today. I actually took a trade on this. Hold on. This gap right here. This 15-minute inverse. Look at this. We inverse it. We come up 50%. 50% of it. Absolutely reverse on the fucking dot, bro. This happens all the fucking time on the 15-minute and the 5-minute. You could literally make a model out of this alone and be profitable. And it's great because inverse fair value gaps are great confirmations, just overall. So yeah. Yeah, hopefully you guys learned something right now. Like, look at this, bro. Again, the same 15-minute fair value gap. There's just something about these 50% marks, bro, of these inverse fair value gaps. Oh, look at this. Just fucking straight sell-off. Crazy. Okay. Have a good weekend. Bye-bye. Okay, I was gonna make a model video today. But reading the chat, I think we need a psychology video more than anything else. So I see you guys talking a lot about like FOMO trading and revenge trading, and that's fine. Like that's gonna happen always anyways. Like you're gonna have some days where you're just like fucking up because your mental is not right. You're not gonna be perfect, But the problem is you let those days just absolutely wreck your account and wreck like a week's worth of progress. And I've done this too, like hundreds of times probably. And it's ridiculous because nothing good ever comes out of deviating from your plan or your system, and you know this so fucking well. Like, I want to make like exercises for you guys that you guys do to counteract this fucking bad psychology. Whatever. So I want you guys to, if you have bad psychology, first of all, take a week off, read a book, watch some fucking psychology YouTube videos, whatever, and just realize that if you keep doing these mistakes, like you're never gonna have that lifestyle that you wanted or that freedom that you wanted. Never, ever, it's not gonna happen. The market is gonna fuck you, right? Like you guys know, and also like for those of you who really, really want like more videos and more concepts, blah blah blah, models, I'm gonna make more model videos. I agree that might be more beneficial, or trade breakdowns, or I mean, everyone has different opinions on what's beneficial or not, but you guys need to stick to one thing or two things instead of always chasing more content. Like, you have this shiny object syndrome that's just fucking insane, and I used to have this as well. Like, I was looking at Goldbach and I was looking at CRT and blah blah blah, whatever the fuck like the newest thing was, I would be looking at it, and it's ridiculous because you haven't seen it for a long time, you haven't backtested it, you haven't whatever. Like, stick to one thing. Like Tristan, he is sticking to the wick theory setup, which is, like, as I've said 100 times, is one of the best setups for overall just risk to reward and consistency. Like, if you use it correctly and you find a high probability rejection block, I've said it a lot of times, that's like, you can use that and never use anything else ever again and be super, super profitable. Like, I saw Tristan just, like, he made $12,000 in his Express account or something crazy. And he's just sticking to that, at least for all I know. That's what he's sticking to. And he's sticking to one thing or, like, two things. And most other traders are, like, they want more content, more fucking enigma, blah, 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 whatever, all the time, and they're fucking unprofitable as shit. Just never finding any consistency because they're jumping from model to model, concept to concept. Like, if you like inverse fair value gaps, use inverse fair value gaps, but use them with fucking good risk management and use good gaps. Don't use every random gap that you fucking see. Like, if you like inverse fair value gaps, I would advise you to, like, only look at the 50% mark of a inverse fair value gap and use that with a tight stop and a good take profit, like a good risk reward, right? If you use change in state of delivery, do the same thing. Like, just any one of the concepts that I teach you, learn them, master them, watch them on the chart, learn what differentiates a good setup from a bad setup, and then just apply risk to it and be patient, and bro, you're gonna make absurd amounts of money in a way shorter period holy fuck, in a way shorter period of time than you think. Like, not too long ago, like a year ago, bro, I was fucking broke, and I was like, how am I ever gonna make this amount? Like, I want this lifestyle, blah blah blah, I want this freedom. How the fuck am I ever gonna make this amount? Like, I was looking at my P&L from day to day, and I was like, a couple $100, maybe $1,000 if it was a good day. And I was like, how? This is never gonna actually take me anywhere. And then you just keep doing it, and you keep doing it, and you keep doing it, and you keep showing up, and you're failing these accounts, and you're like, I'm doing this all for nothing. But then all of a sudden you kind of stop thinking about the end goal and you just focus on the process, like right here, right now. Today I have to do the best that I can, and if I do bad, then there's always tomorrow. There's always, if I do bad this week, there's always next week. Like, and before you know it, like, I remember when I decided to just like lock in and be like, I don't care what the daily outcome is going to be. I'm just going to place my trade. I'm going to get on with my day. If it hits stop loss, fuck. If it hits take profit, great. There's always tomorrow anyways. Like, fuck the outcome right now. Just keep showing up, keep being consistent. Because if you're consistent, you can do, like, if you're everything else but consistent, you're never going to make a fucking dollar. You can be consistent and miss a lot of things and still be fucking profitable. And just for the FOMO trading and the revenge trading, that's something you just grow out of with time. But you have to, like, do exercises and, like, actually just realize this is never gonna take me anywhere. But yeah, as I was saying, like, I never thought I would make the kind of money that I'm currently making, and then all of a sudden, like, with these Apex accounts is obviously where it changed. I was just seeing, like, absurd amounts of money, and then I was actually getting payouts, and I kept getting payouts, and it was like, whoa. Like, I thought when I took it, like, my biggest payout was like $9,000, and I was like, whoa, that's insane. And I was like, well, that was nice. I'm not gonna make more money for a while. And then I made $12,000 the next month, $12,000 the next month after that, and I was like, whoa, how the fuck am I doing this? And it was just being consistent, because I was still, like, losing and winning. Like, I didn't have a super good win rate, but I had a really good risk reward and, like, a decent win rate and good psychology and good consistency and discipline, blah blah blah. First of all, when you're up for the day, stop. Just fucking stop. Do not do anything more. You're up for the day. You made money in the fucking market, which should be statistically impossible. Just go watch a movie, bro. Just fucking relax. When you're down for the day, take your one more trade, and just, I want you guys to imagine, like, if your P&L is at $300 negative, I want you to imagine yourself taking more trades and literally ending the day like 1,000, 1,500 negative. I want you to visualize your account balance saying minus $1,000, and then, like, literally I used to do this, I'm not joking, like, close your eyes. Like, this is if you're taking a loss. Like, imagine you take a loss. You have that loss in front of you. Just close your eyes. Imagine just your P&L says, like, minus $2,000. I want you to imagine that and fucking believe it. And then open your eyes, and then you see your minus $300 loss, and it's gonna feel a lot better, because I promise every one of you has been there on, like, that minus $2,000 fucking day where you just fucking reset weeks of progress in one day or whatever. Like, do exercises like these. Just take days off when you don't feel like trading. Like, the market is not going anywhere for all. Like, I didn't take a trade today because I was, like, kind of like, you know what? Today looks kind of shit. We had this move before market open, and I was like, okay, nice. We're moving away from all-time high. We had elections this week. We don't have any red folder news, and we have this, like, choppy fucking move back to the upside. We opened, market open, and just immediately, bro, just ugly fucking price action. So I was like, you know what? I'm gonna sit on cash. I'm gonna preserve capital, because I know that I would have lost in this. Like, maybe wouldn't. Okay, I'm gonna be fair. This was a decent setup, but, like, it's not moving that much either. So, like, if I shorted 10 a.m. open at 207, Yeah, there's like barely 30 points. Maybe it would have hit my take profit, but whatever. I don't care. Moral of the story, just fuck. Ugh, I don't even know. I think I covered the moral of the story. But yeah, stick to one thing. Do exercises that allow you to like grow out of this childish behavior, because that's what it is. You have a gambling addiction, and you just feel like that P&L is just tied up to your worth as a human being. Like, I was wrong today, so today I feel just dumb. And I do this too. Like, I still have that underlying feeling of like, when I take a loss, my whole day is like slightly more negative, and if I take a win, my whole day is like slightly more positive. And I don't like that feeling. I mean, I like the positive feeling. I hate the negative feeling, blah, 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 of course. But don't let that feeling lead you into taking a fucking bullshit ass trade and blowing your progress. Like, you're gonna grow out of this if you keep going. And yeah, just stick to the model you like. Apply risk, apply patience, apply discipline. Otherwise, you're never ever gonna have the freedom or the success that you want. Like, it's gonna happen so quick when it first happens. Like, it's unreal. Before you know it, you're gonna have 100K in your bank account. Boom. It's gonna take you fucking maybe 6 months, and you're gonna have 100K like that if you just fucking lock in. So, a little rant there. Hopefully you guys listen to this and apply it to your trading. I know it's easy to listen to this right now and be like, fuck yeah, I'm gonna do this. But like, actually, bro, when you're sitting there with that negative P&L, actually fucking do it. That's the start. Like, when you start doing it, it becomes way, way easier. Like, do it for a week. Just do that as like a challenge. Do it for a week. And you're gonna see that the week after that, it's gonna be way easier to do it again. And then the week after, even easier. It's gonna be like the ball is gonna start fucking rolling, bro. So, yeah. Overall, glad I didn't trade this. Although, like, the key opens kind of cooked, but whatever. So, have a good weekend. Do watch some trading psychology videos in the weekend, or like buy a trading psychology book. Just something, or just to detach from trading altogether. All right. Yeah. Right. Another topic that I wanted to take up today is how to handle losses. I think someone asked me how to deal with impatience, but that just comes with time, to be honest. However, dealing with losses is one of the hardest things to overcome, because you have to overcome your greed. And this also, like, yeah, this video might help you, might help your perspective on things, but it's not gonna stop you from revenge trading or over trading or whatever. Like, you're probably still gonna do it. Like, the sooner you stop doing it, the sooner you're gonna be profitable. But the unfortunate reality is just that I can't actually make you do anything. You have to do it yourself. But this is something that this is just how I think of it. And when I take losses, or like when I used to take losses like months ago, I would be like, fuck, why did I take that trade? Right? And then I would do my thing, de-risk 50%, lose again. I would be like, fuck, that was probably a bad trade, even though it wasn't, right? It was a trade that I was perfectly fine with executing on because I think it looked good, right? And why do I then feel bad after it ends up being a loss? It feels bad just because the P&L is red and not green, right? The trade is exactly the same. Why do you take that trade? You took that trade because there was two outcomes, right? There's never only one outcome. There's always two outcomes. Either you win or you lose, right? After you take a loss, you, for some reason, make up this idea in your head that it was a bad trade and that trade was just a losing trade from the get. Like, no, you took that trade full on, knowing the risk. Every day you do this because there's a chance that you might end up in a winning trade, right? And your winning trades are bigger than your losing trades. So it's just all about, sorry for moving my chart so much. I think I got ADHD, I don't know. It's just, you're letting the P&L and the color of your P&L dictate whether you did a good or a bad job. And that is not going to work long term. You have to just follow the system. If you take a loss, good. If you take another loss after that and it's half the size of the first loss, good. You followed your plan. There's nothing you can do. You got to wait until tomorrow, right? Because if you start doing that dumb shit where you just go on a fucking tilt and you start trading without a stop loss and you start going in extra cons and you start averaging into bad positions because fuck, I'm not going to take a loss today, like, that's bad trading. The trades that you actually take that are good, that get stopped out, you don't let that discourage you from, like, you got to be happy with a loss, you know, because it could be a win. You just have to come to that conclusion every time you take a loss. Okay, I took a loss, but it could have been a win, so I'm glad I took it, right? And if you can just stop revenge trading and stop over leveraging for 1 week, then the next week is going to be way easier. And then the next week after that is going to be even easier. And then you just kind of slowly just settle into this seat where you have this fucking seatbelt on with just good rules and you have a system and it's all just dialed into your system and you just show up and execute. If you lose, that's fine, I lost. It could have been a win, so I'm glad I took it. But it's a loss, and now I gotta wait until tomorrow. Because if I don't, I'm gonna make some irrational decisions, and I'm gonna make unnecessary harm to myself and to my account. Like, this is your fucking future that you're trying to build, and you're so impatient that you can't even see a little red P&L on the day. Even though you know your winners are way bigger, and your week most likely is gonna be green, and your month is gonna be green. But no, you would rather put everything off. You're trying to fuck up your future because you can't handle this loss today. Like, take your loss. It was a loss. Good. Could have been a win. I'm glad I took it. Now tomorrow is a new day. Okay? So you just gotta go into the market every day and think like this, and then eventually it just kind of marinates in your mind and you just kind of settle more. When you're new, you're gonna make mistakes regardless, because you haven't, like, mistakes is what makes you realize these things. And the reason I know these things is because I've done every fucking mistake in the book, right? And now I'm glad I made those mistakes. But then, back then, I felt like an idiot. But every time, like, something great happens, or like I have a huge winning streak, or I just have a period where I'm really, really consistent, it's always because there was a time where I wasn't like that. There was a time where, like, I would blow everything in one day. I would go into the market scared because I knew I was scared of myself pushing the button because I knew I might fuck everything up today. I'm going into the market today and I might fuck everything. And one day I just realized I can't be doing that anymore. I need a system. And you got to come to the same realization. The sooner you realize that, the sooner you're going to make money and be profitable. All right, rolling. My voice is pretty fried, so excuse me if I like cough and shit. But yeah, before I get into these model videos, I wanted to actually make a video on entry triggers or entry mechanisms. So, as you guys know from the engineered liquidity video, this is what engineered liquidity looks like when we have our point of interest or our level. In this case, new week opening gap, CE or 50%. Why is this good? Because we also have a lot of imbalances in this area, sell side imbalances, and we have this engineered liquidity below. Right, so this is just like, this is right now, but I think it's a good example. I didn't take this because election's tomorrow, so I don't really know what to expect. Oh my god, I got 3%. Oops. Right, so let's just get straight into it. For me, there's 4 ways of entering a trade. And the first one is, of course, just entering straight at the level, which pretty much only is valid if you have this engineered liquidity. Let me just... There. So if you have this engineered liquidity under your level, or I mean below or above, whatever, you can enter straight at the level with a 10-point stop, 5-point stop, whatever you want, depending on the level, of course. But there's also more ways to do it, and my favorite is probably going to be the rejection block. For those of you who haven't watched that video, then please go watch it. And it's basically the wick that rejects the level is gonna, like, we're gonna have some bearish confirmation, and then you're gonna just use the wick that it makes. It doesn't have to be the 50% mark. It just have to be like the very low, the wick, like right here. If you would like make a line right there, like this is where you would enter. The new week opening gap is gone on the 1 minute. I don't know why, but anyways, that 3-minute rejection block is also a 1 minute change in state of delivery, which is my third way of entering a trade. So this is also very good. Like, this is also just going to give you a very good risk reward, because you're entering on this confirmation and you're putting your stop above this level, or that high that it made after tapping the level, right? So in this case, it would have been a 3.5 point stop, which is just kind of ridiculous. I would probably put it at 5 points, so like it can come up and like slightly sweep this out, because it does that a lot. So for me, like 5 points is just minimum. I used to do crazy trades like 2-point stops, 3-point stops, etc. But for me, I just find like 5 points is more than enough. Like, it's still gonna give you like ridiculous RRs. Say you just aim for the first low, it's gonna give you a 1 to 8 RR ish, right? So I mean, this is just this is kind of random that this 1 minute change in state of delivery lined up so nicely with this 3-minute rejection block. I mean, nothing is random, but like, you get what I mean. It makes it higher confidence. And then the fourth way is actually the inverse fair value gap. So that's going to be right here. Let me just clean up a little bit here. That's going to be right here. All right. You see we close below the fair value gap on the 545 candle. So what's your entry going to be? You can either enter, oh my god, you can either enter at the 50% mark of the inverse fair value gap, but a lot of the times it's it's just oh my god, Jesus Christ, it's a lot of the times fuck, it's just gonna tap slightly into it, maybe even just like tap it, like barely tap it, and then go. Here obviously you have the 1 minute change in state of delivery, and then you get another 1 minute change in state of delivery out of that, and then we come up and retest that inside of the inverse fair value gap. So like if you guys don't want to enter straight at the level because it's scary, like the price usually gives you a fair amount of entry opportunities if you look on the lower time frame. So like 1 minute, 3 minute, whatever. Yeah. The fifth one is also like this is not oh my god. Jesus, bro, what the fuck is going on? The fifth one is like not something I really use a lot for this on the lower time frame, but it works, and it's gonna be the fib. So like the first rejection leg, so this leg right here, oftentimes it's gonna get retraced to 0.5 or 0.62 or 0.705. But the fib is better to use on like the 5 minute time frame, and then use the actual candlestick structure for the lower time frame confirmation entries. So yeah, but let's say we entered on this inverse fair value gap. Let's say we entered on the 50% mark, and you just still keep your stop above this high, because that's what makes sense. That's 5 points exactly. That's perfect. And then same as earlier, we aim for the first swing low, which is 37 points. This was actually a fucking nice ass trade, bro. But elections tomorrow. I never traded elections. I don't know what to expect. I was not expecting this clean ass price action, but yeah, whatever. And if you entered here, still 6 point stop. Yeah. So yeah, that's pretty much it for the entry confirmation, like the lower time frame confirmation stuff. I'll make a list below this video so that it's easier to organize. But it's going to be either straight at the level, rejection block, change in state of delivery, or inverse fair value gap. And these are all on like the 1 minute or 3 minute time frame. If you want even more confirmation, you can get 5 minute, but then you're going to lose a lot of entries or get just like slightly worse risk to reward, which is fine because your win rate is going to be higher. You're still going to have a pretty good, wait, that's not, fuck. You're still going to have a pretty good risk to reward compared to a lot of other concepts. You know, you see this 5 minute still within our 10 point stop range. Aim for the swing low, still a 1 to 3.5. So still very good if you want to use the 5 minute and you want more confirmation. But yeah, I know you guys want these model videos, but just to be clear, you have to watch the concept videos first to really understand everything, because everything is going to be derived from the concept videos. So yeah, I gotta fucking fix my voice and not be sick. But yeah, I don't think I'm gonna trade today or tomorrow, even though it's looking pretty fucking clean. But yeah, I just never traded elections. Maybe I'll do 5 micros per account. But I'm in no rush right now to trade. So if I gotta wait until Wednesday, Thursday, or even next week, doesn't matter. You guys should take a week off sometimes from trading just for your psychology because it's fucking great. Yeah. And I'll start pumping out these model videos. But watch all the concept videos and then study them, implement them, and then, you know, this is also a good video in my opinion. Because not everyone wants to enter straight at the level because it is scary and it is gonna stop you out maybe more times than you're comfortable with. So if you're not comfortable with that, then there's a lot of confirmation entries like I just showed you. So yeah.
All right, this is going to be a trade breakdown of the trades that I took on Friday. So the first one is going to be the 77150 level that I called out to one of you. It's a daily low wick CISD, which I know someone asked me about just like 10 minutes ago. So this is an example of where I would use the wick instead of the opening price. I'm going to mark the opening price as well. So like in the top-down analysis, that's what I'm going to basically go over because we got the previous day high and low stuff. And then also I look for these like daily CISD and then 4-hour and 1-hour CISDs are the most powerful and the most consistent. And so the 771 level is the wick low of the CISD candle, and it's also the CE of this wick, like to the tick. So let me just. This is where like I fucked up so bad, bro. Wait, hold on. Let me just. Right there. This is where I fucked up so bad because I had a bad Wednesday and Thursday. I had 2 losses, or like 2 losing days back to back. And so I got this dumb fucking idea that I was gonna like basically risk, just instead of risking 10 points, I was gonna risk 7 points. And I swear to God, bro, this was so fucking random. I do a 7-point stop. And if you guys haven't watched my last TikTok, that's basically where I show this with the executions. You guys know I'm not a fucking piece of shit that doesn't show executions, but anyway. I do a 7-point stop because I want to be kind of risk off. Normally I would do a 10-point risk, as you guys always see. And it fucking does this shit, bro. Wait, what? Oh, wait, no, because I entered 71. And I had my stop at 78. And it does this fucking shit, bro. It's a random 7-point stop and it fucking does this. And then after that, it just fucking rallies to my TP. Which is so fucking unfortunate. This was with a full size as well, so I lost like 140 on all my accounts. I would have been up 800 on all my accounts, which is like 5 bands. On that group I was trading. After that though, I waited. Oh my god. Hold on. I waited and I waited and I waited because I was fucking pissed off and I had the impulse to fucking revenge trade. But I was not gonna do that because I'm not fucking dumb. So, I think, was this my second trade? I think this was my second trade on MNQ, so micros. If we go on the 4-hour, we have a 4-hour breaker and a 4-hour order. Am I blind? And a 4-hour order block. Hold on. Yeah, this right here. We have this 4-hour breaker, which we left equal highs inside of the breaker. I didn't short initially off the breaker because I was just pissed off. I didn't want to really rush anything. So I waited for some more structure. And obviously this would have been a top tick and this would have hit TP with no worries. This gave like 100 points. So I could have done that. But instead I waited and I saw that we engineered these equal highs inside of this breaker. And I know I haven't touched on engineered liquidity yet, but basically equal highs and lows is the best form of engineered liquidity, because there's a lot of stops above here. So I souped this. I think my entry was like 97 if you guys look in my TikTok, and I did a 10-point stop and a 90-point TP. So I basically I didn't even target this low. I just targeted these tiny wicks because I just wanted to be risk off, as I said, because I just had 2 losing days back to back, and I had that fucking annoying ass loss in pre-market. So yeah, I get tagged into this, sweeps the highs, and then it's just pretty straightforward. Obviously, I should have left one con running in hindsight, but fuck that shit. I'm not greedy. So, ended the week on a positive with a 9 risk to reward. I'm very happy with that. Recovered all my losses plus some more with this trade, even though it's half-sized. This is what's so fucking beautiful about trading like this, like having small stops and having specific levels. Like this too, you could have just entered on this 4-hour breaker with a 10-point stop. Does it stop you out? Doesn't fucking matter, because your wins are so much bigger. Like this half-sized win recovered 3 full-sized losses plus some more. So yeah, that's just, if you can just stick to this when that shit happens, don't revenge trade. Just keep it level-headed. If you get stopped, hunted on like a live account, and you feel the absolute urge to revenge trade, please do it on a eval account and not your live account. It's not going to end well. It never ended well for anyone, including me. The only thing that ended well ever with trading is just sticking to your rules. Everything else is just going to put you down a fucking rabbit hole you don't want to go down. It's going to be losses, and then you're going to fucking cry, and you're going to fucking pull your hair. Do not fucking do it under any circumstance. Like, you see this. Did I delete? Oh, yeah. Anyways, you see this trade, like it stopped me to the tick, and I missed out on 5 bands. And I got so fucking pissed, bro. So I'm low-key, like, proud of myself for not fucking going full tilt and just chasing or whatever. But yeah, the only thing that's ever gonna work is if you follow your rules. Do not overtrade, do not revenge trade, and do not over leverage. If you do any of those, you don't even have to do all 3. If you do any of those, you're gonna get fucked, bro. So please do not do that. That was a quick psychology lesson, yap attack. I hope you enjoyed these videos today, and goodbye.
Okay, Fib video. This is probably one of my favorite tools to use with other levels. The Fib is super fucking powerful, especially with these settings right here. So what's going to be most sensitive is the 0.5 and the 0.705. 0.62 is also going to give a lot of entries, and if you don't want to use that with a bigger stop, then you can, but I prefer using the 0.705. Who is spamming me right now? Oh. Alright, anyways. Making me jump up and down and shit. So you can this, like, if your bias is bullish, we sweep some liquidity, we come into a level, we're gonna have that initial bounce. You can use this for like a what the fuck would you call it? Just like a safety net if you miss your first entry or whatever. Bro, I gotta turn those notifications off. So yeah, you can use this on any time frame pretty much. Price usually gets really aggressive, like when it comes down to that 0.75. If it starts to like this is also great to combine with the AMD video or engineered liquidity. Those are kind of the same concept, but this is great. I took an entry off of this, like, I think, was it Wednesday? Oh, I don't remember. Oh wait, maybe it was yesterday. Shit, I don't remember. I should have prepared for this. Fuck. But yeah, I took a 0.705 entry with that had like the AMD. Fuck, I should actually find that. Okay, I'll make a trade breakdown on that trade and I'll find it. But yeah, most importantly, just get your settings to these settings, and actually this probably works best on like the lower time frames. Yeah, 0.79, also a very good level. What I also always do if I use the fib is I enter at 0.705 and I always put my stop like below the 0.79. Obviously you can put it all the way down at the low, but that's just gonna give you a stop that's I'm not really a fan of. So enter here, 10-point stop. You really don't have to overcomplicate trading. This just fucking exploded, but yeah. Target 40 points, target this high. Perfect. 1 to 4 in literally 3 candles. That's what I mean by price usually gets really aggressive down here. It's like a what is it called? Like a, oh my god, bro, I don't know English anymore. Like those things you pull back and then it bounces up. Fuck. Right, I'm actually stupid. But you get my point though. So if you're like anticipating a move, this is a great confluence to use for either entry or just a confluence for your levels. Like here we had PPI, we have the 830 key open in this 1 minute fair value gap and this breaker, right? And this the 0.5 of this leg. So yeah, that's just really quick example I just found right now. You want to combine it with your other levels, obviously. And also, it, like, if there's one place where you wouldn't use it, it's this shit right here. I mean, like, you can still get like a bounce out of it It's not what I'm saying, but yeah, everything in this type of price action is just going to be drastically lower probability because it's accumulating for a reason. Like, we accumulate for a long fucking time, manipulate up, down, up. Like, this is just, yeah, this is not pretty. So hopefully we get some cleaner price action soon. It's been like a lot of chop and then big moves with no entries usually. So you got to be really aggressive with your entries. Like, what is this, bro? Support and resistance, all price action. All right, yeah. I'll make more videos on pretty much all the concepts. I'll just, yeah. Hopefully we get some better price action soon, bro. All right, goodbye. Right, so another trade breakdown is going to be the one where I gave the signal with the 2-point stop. And yeah, let's just get right into it. So to start off with this trade, I just went on the 4-hour. That's what I usually do. I start at the 4-hour, and then if I see some good 4-hour structure to go off of, I will then like check daily to find some levels, weekly potentially, and yeah, just go 1 hour, 50-minute, blah blah blah. Anyways, so this, I haven't done like a lecture or like I haven't taught you guys this yet. So this is just going to be like the reason for taking the trade and just like a quick explanation. I will teach this in more detail later. But yeah, anyways, this trade is a wick CE and it's a 4-hour wick CE. The reason this is a good wick is because we have these highs right here, which have been swept. We have this high right here. We don't want that to get taken, which it didn't. Wait, let me just remove this. Hold on. Okay. And then we also engineered some liquidity right here, right below this CE of this wick. Now, why would I just take this short specifically? Well, we have some sell side down here, which would be my bias. I guess this would be the real sell side. And if you go on the 1 hour and we mark our true open, hold on. Let's find the bitch. Oh my god, am I stupid? No. Yeah, our true open right there. We have our 4-hour wick CE right here. So the reason this is good is we have this 4-hour wick CE, we swept liquidity with this wick, and we engineered liquidity right below the CE of this wick. Something else to look at, like if you're gonna find some levels, is just, you know, start marking out your other 4-hour levels. You can go like daily. Look, okay, we're inside this daily order block. So we're gonna look for sells, you know. Weekly, same thing. You just want as many confluences as possible to find that one specific level. Okay, so we're above our true open for Thursday, which is the midnight opening candle. And what that tells us is look for shorts, essentially, if you got a bearish bias, which we do because we have the sell side down here, right? So let's just try to not fuck this up. Right, okay. Where? Let me check. Market open. Market open. Right there. I think we held this through market open, so we got tagged in before market open, like very soon. And this is also very good, like we're engineering these equal highs.
which is just giving us more confidence to sweep it and go down. There you go. We tap into this. I signaled the short at like 210. The wick exactly is 1050, but you gotta account for like spread and tomfoolery and fuckery and that shit. And with a 2-point stop loss, targeting true day open, that's a 25 RR. Oh my god, that's so small. Yeah, so letting this play out, we see it starts getting a reaction, and then market opens, and it has a like a wick up, if I remember correctly. Yeah, right here, this wick. No worries though. I think at market open I put my stop loss to break even, but like it's 2 points, so whatever. And then yeah, smashed the TP. I've seen, like, this is the way I've been looking at price for months and months, and I see these levels getting ticked all the time, and I just thought I have to use this. This is why, like, you can be profitable with almost any strategy. You can be profitable with trend lines, support and resistance, blah blah blah. But the reason you join this mentorship is because you want more, I'm assuming. You want more, you want to be precise, you want these sniper entries. And when you start looking at price like this, I mean, you can't fucking lose, because if you do this consistently, like, you can lose you can lose 9 out of 10 times and still be super profitable. So obviously, we don't want to lose 9 out of 10 times. We want to do this consistently, but you get the point. So yeah, that was pretty much it, I think. After this, this is probably gonna be the last like trade breakdown before I start actually teaching these concepts, and just I'm gonna go through like concept for concept in like separate videos, one video for each concept, or like each PD array, blah blah blah, whatever you want to call it. And then the trade breakdowns is just me putting it all together into one trade, and yeah, that's pretty much it. So I'm gonna start pumping out some videos more frequently. I finally figured out this fucking QuickTime player, so hopefully this quality is a bit better than the fucking OBS bullshit. Yeah.
All right. This is gonna be or actually, I gotta do separate videos because they were too long. All right. So this is from, what was this, last week, 2 weeks ago? I don't know. I wanted to do this one because I wanted to use an example of a very good week CE example, and these are 2 trades that I took and called out in the chat because they're so clean. 4 hour is probably one of the best time frames to do the week CE on. Daily and weekly and all that, yeah, it's nice, but the ranges are so big that, I mean, getting away with a 10-point stop loss on like a daily or weekly candle was not something that I would probably bet my house on. But 4 hour, 1 hour, 15 minute, those are really good. 5 minute too. What matters here is the criteria. So I think this chart is low-key fucked up because this is from the NQU or NQM, I'm not sure. Anyways, this wick, right, taps into this massive imbalance area and rejects, right? What do we call this rejection block? It's rejecting something. pretty self-explanatory. Now, what makes this rejection block high probability? So, right, we've identified that this is a rejection block. Easy. We've skipped this liquidity from this previous 4-hour high. And then what makes this a high probability CE play is this engineered liquidity right here. If you don't know what engineered liquidity is, then go watch that video. Watch either engineered liquidity or the A&D. They are pretty much the same thing. But yeah. So actually, I don't know what candle actually. Right, so it's that one, yeah. Fuck, let me just rewind that one. So this is even better because we're getting equal highs, which is, I mentioned in the engineered liquidity video, that's like some of the best liquidity you can get as engineered liquidity is equal highs, because there's going to be a bunch of stop orders above here. So let's just fast forward a bit. Right there, yeah. So we've identified the rejection block. Now, what makes the rejection block high probability and valid is the engineered liquidity, right? It's not that hard, but this is a model in and of itself. You can use it on any time frame, 4-hour and below. If you want to do small stops, of course. If you want to do swing plays, you can do that as well, but you got to do slightly bigger stops. Okay, so you would just place your limit on the CE. The CE exactly is 503, so we would put it at 2.50, and then you can do either a 5-point or a 10-point stop when you're doing 4-hour candles. I prefer doing 10-point stops. But if there's one model that you can get away with 5-point stops, or even, I've done this once, 2-point stops, it's this model right here. Like, this is the model I would use if I was to grow a live account and I wanted to hit ridiculous risk to rewards, risking 1% per trade. I would be using this model, because like the risk you can get away with is just absolutely absurd. So let's actually scale down in time frames here. Alright, let's get tapped in. Gets tapped in right there. I don't remember how long I held this trade for. It's probably like 40 points. That's what I usually do if I'm on my Apex accounts. So 40 points. Yeah, pretty, like 2 candles. I don't remember how far this ran, but like we're on the 4-hour chart, so I'm assuming this ran for a bit. Yeah, that's what's nice about this model, especially on like the 4-hour and 1-hour, is that you're often gonna catch like the high of day, or like even just a high where you're gonna catch an actual like proper sell-off when you can like just keep your stop loss at break even. And fuck, trailing is also something I have to make a video on. Trailing your stop loss. Short and sweet, it's just going to be, you're going to put it above highs that get created. For example, in this scenario, you're going to trail your stop loss to this high, or you're going to trail your stop loss above like a 1-minute order block. That's what I do, so yeah. Alright, I'm going to stop this video here. Hopefully this makes sense, and I'm going to make another video right now. Right. Example number 2 of a weak CE. I'm sorry about my voice, by the way. I think I'm getting a fucking cold. But anyways, let's get this set up. It's this wick, exact same setup. I think it was the next day. Yeah, because I remember it was Thursday and Friday. They're like back to back, same setup, same chart, or same time frame. So yeah, let's see. We get this engineered liquidity, right? Why is this a rejection block? Well, we sweep all this liquidity, these equal highs, right? And we reject the CE of this wick. Fair enough? Good. So you're gonna eventually start to see these things like just be like, oh, okay. And it's gonna like seem obvious. I remember this trade. I actually missed the first setup. It hasn't appeared yet. I think it's gonna, what time is it? Okay. Oh fuck, I went too far. Right, so it does tap it in the first time. Right there. And I missed this entry. Let's actually go into the 1 minute. I missed this first entry because I don't think I was on the chart, or I was looking for this exact entry, but I didn't want to limit order. I wanted to market order. So I missed it. I think I went to the bathroom, some bullshit. I'll also slap the executions in the channel where I post these. I just have to find them. So I actually waited for it to retest the week CE. I think it was 77, 76. Or did I? Bro, I'll find the executions and post them in here. But yeah, standard procedure, 10-point stop, 40-point take profit, right there. See when we get tagged in. Right there, 76.50. The wick CE exactly is 77, so we're gonna do 2 ticks below that. Standard procedure. Gets tagged in, and let's just, yeah, straight to take profit. So yeah, what makes this valid? Wait, did I? Oh. So we know that rejection blocks are sensitive areas. I do not remember if we had an SMT here. We probably did. But these levels are like reusable. You can use them a lot for re-entries. Like in this scenario, I was fucking lucky because this would not have went to my TP, and it would have stopped me break even, and then it would have went to my TP. So this was just actually lucky that I didn't get in on this first tap. It went to like 30 points and then reversed, stop break even, then go to my TP, which, you know, I would have cried, but it's whatever. So yeah, like I said, if I was to grow a live account, I would definitely do it using rejection blocks just because of the absurd RR you can get. Like let's say you risk 1% on a 5-point stop. I mean, on a $10,000 account, that's not a lot. That's gonna be what, $100? You can easily risk $100 3 times a day. Like risking 3% a day on 3 trades with 5-point stops. Like if you hit a 1 to 8, you make 8% that day. Bro, yeah. So hopefully this made sense. I'm gonna say it one more time. Wait. Rejection block It has to be valid. It has to tap into something, sweep something. If it does both, then fucking great. And then the most important part of it all, the reason this is a good CE entry, is this engineered liquidity. Those two things do not over complicate it. It is not complicated. It is a simple model. I know a lot of you guys use it. You love it. You're seeing success with it, which makes me happy, but a lot of you are also overcomplicating it. It's literally just those two things. Also a third thing is bias. Like, you have to have a bearish target, obviously. Otherwise, price wouldn't have gone down. Tap into something, reject something. That's why it's called a rejection block. Then engineered liquidity below our level. Our level is the 50% mark of this wick, right? That's pretty much all there is to it. Do not overcomplicate it. It is not complicated. Just, you guys gotta stick to one thing. If it's this, or if it's market maker models, or if it's the fib, just stick to one thing. Backtest something, and then you're gonna find out what you like. Like, see with fibs as well, you can get absurd RR. So that's also like something I would consider for a live account, but yeah. Alright, anyways, I'll make more videos. This one's probably too long, fuck.
Alright. Yeah, alright, okay. I'm gonna make the a video I was talking talking about to you guys about the wick theory model, and how to make it higher probability. So first, can I just type on here? Can I make like a list? Fuck. Oh yeah, I can. Okay. So number one is, you don't want your wick, even though it fits the criteria, you don't want it to be the beginning of an unfilled imbalance. Why am I... Bro, this was not... oh, it's size 40, no fucking wonder. There, that's better. Number one, it should not be the beginning of an unfilled imbalance. So, if you look at this high, right, or this wick, you see that it actually fits the criteria for a wick theory model. You know, it swept this internal liquidity. It has this liquidity below the CE of it. But what is the problem with this wick is that it is the beginning of... Oh my god, bro, please, just fuck. It's the beginning of an oh my god, I'm gonna crash out. It's the beginning of an unfilled hourly imbalance. Those are the wicks you don't want to take. If it's an hourly, it's a 4-hour daily, 30-minute, 15-minute, 5-minute, 3-minute, 1-minute, whatever. Just in general, like, if it's the beginning of an unfilled imbalance, then do not take it, because it's going to be lower probability. Oh, this is actually pissing me off so much, bro. I thought they fixed this, but I guess not. Is this mouse sound fucking annoying to you guys? I'll just stop using it. Okay. Actually, no, fuck that. Can I... That's better. Okay. So, number one, it should not be the beginning of an unfilled imbalance. If it is, it could still work out, but it's going to be way lower probability. Number two, if you want to make it... Wait, I should probably do a do's and don'ts. So, don't Yeah. And then do, fuck. This video is gonna be too long, isn't it? Fuck. Do, oh fuck. SMT. Oh my god, I'm gonna fucking crash out. Okay. If there's an SMT at the wick that you're trying to short, that makes it way higher probability. So let's just say, for example, I'm not gonna fucking toggle through ES and NQ right now because it's being gay. But let's say this. Wait. Right. Let's just say this one. Right. This 1 minute wick. Right. Fits the criteria. Blah blah. Let's yeah. If there's an SMT at this high, it's gonna be way higher probability because I mean otherwise you're kind of in a way trading support and resistance. I mean obviously we have more criteria than just like it's a high, it's a wick CE. It's like this is a model, we mitigate something and then we reject, leaving liquidity below CE. So like if you get an SMT on top of this too, like then that's great. Can I type on this now? Yeah. All right. I mean, honestly, those are like the technical shit. Like the other stuff is just gonna be don't trade away from the DOL or the draw on liquidity. Like yeah, you could get a reaction, but like if we just mitigated something on the higher time frame and you're trying to like say it's bullish, you're trying to take this bearish wick, just don't take it, because especially how I like to trade is I like to trade with like a high win rate, high risk to reward, and then like a lower trade frequency. So I'll just wait for everything to kind of be perfect and then enter, right? Yeah, and then I feel like this is not the best way to do this, but fuck, whatever. I think these are like the most like basic, most important ones. I feel like there's a couple things that I wanted to talk about that I'm forgetting, but I guess I'll just make another video. I have to keep my videos like below 10 minutes because otherwise Discord won't let me upload them. And I got Discord Nitro plus fucking Pro Max and all that bullshit, but just like, yeah, whatever. Okay. Also, yeah, I mean, another thing is like, let's say this, I mean, it doesn't do that. I mean, it kind of does. So let's say this high right here is a swing high. I don't really pay attention to equal highs when it's like this. Like equal highs and equal lows should be like swing lows and highs, not just random like this. But let's say this high is actually a swing high. So if we got like equal highs in the form of two swing highs, and we have this wick that fits our criteria for the wick model, then don't take it. I'm just gonna put equal high, equal low, and that's for this wick, right? If that wick forms equal highs or equal lows, then I wouldn't take it. Obviously, this is not a swing high, so I wouldn't fucking care. But yeah. There's probably something I'm forgetting. But yeah. I think you guys got the idea. Just take these notes, implement it, and then go watch it actually play out on the charts. You guys see how often this shit plays out, right? So yeah, I'm gonna make the bias video now because everyone is fucking tagging me, telling me to do it. So, all right, goodbye.
Right, I'm gonna make a quick video on the gap fill, and this is a very simple concept. I'm sure all of you are familiar with fair value gaps, and I've talked about this before, about using the 50% mark of the fair value gap, this line right here, which is what I mostly use for my levels. The other part of a fair value gap that's actually really, really good and like a sensitive part of a fair value gap, because obviously you can't just enter randomly in a fair value gap. Like, look at this. This is a 90-point big fair value gap. It's on the 4-hour though, so it's going to be bigger, but still, you want these sensitive areas within the PD arrays. So the very low of a bullish fair value gap with the most premium, discount level of a bullish fair value gap is going to be super sensitive. It's going to fill this entire gap. We're calling it a gap. I'm not really sure why we call it a gap again, but that's besides the point. It's called a gap because there's like buy side imbalance, sell side inefficiencies. We're just filling this whole inefficiency, which oftentimes is going to cause a reaction. This is the trade that I took, I think yesterday. This 4-hour wick, yeah, at 5:03. Oh my god, voice crack. Because we had this engineered liquidity, this wick, liquidity below the CE of the wick. Perfect. Short that bitch. And then today I actually took the exact same setup, which was this engineered liquidity below this 4-hour wick CE. At like, yeah, 477. Sold off pretty nicely. Yeah, anyways. And here, like, if you go on the 4-hour time frame and you look at these gap fills, it's gonna look like it just fucking ran through it. But if you actually go down in time frames, you're gonna see that we actually had a pretty decent like top tick reaction here of like 50 points. Because this is a sensitive area. So like for this, you can basically use any time frame. It's like you can use it on lower time frame as well. It's just going to give you that better entry. But if you only use the very low of the fair value gaps, like I just showed, you're also going to miss a fair amount of entries. So that's also something, like, that's just personal preference. Like, do you want like the best entry, or do you want to actually be in more trades? So yeah, this also huge 1-hour inefficiency. Using the very top of it, we get a 250 point sell-off. So yeah, obviously combine this with your other levels, and probably most importantly, combine it with liquidity. Engineered liquidity is super powerful. Obviously, anything you combine with liquidity is gonna just make your win rate way higher. So I advise you guys do that. I'm gonna make some more videos, try to finish all these channels. So yeah.
This is gonna be a video on the PXL or PXH PXL strategy, or otherwise known as previous day high, previous day low, previous session high, previous session low, previous fucking 4-hour high and low, 1-hour high and low. You can use this pretty much anywhere with context, of course, but the daily is what has the biggest win rate. The daily is like almost probably the most powerful time frame, so that's what we're gonna mainly use it for. And all it is just open, high, low, close. So we close above this, which means that we now want this high to get taken. I mean, we're already right there, so like, yeah. We close like, okay, that's a shitty close, but like, expect the high to get taken because we're bullish. Okay, close. This is gonna get taken. Gets taken. Creates our CISD. We're gonna come back to this. right there, comes back to it. However, we also sweep this low and we close here, we close above this line, which means I want the high to get taken again. That high gets taken and we close below the high. That leads me to believe we're going to take the low now. Makes sense? Takes the low, closes back within, expect the high, fails right there, doesn't matter. Took the low, closes below the low. When it closes below, we're expecting the previous day low to get taken. Gets taken. We have this wick up as like a Judas. Judas up, wick down to the target. Closes below again, we want this. That gets taken, that closes below, we want this. Fails and takes the high. That's okay. I'm not going to sit here and pretend like everything is 100% win rate. You're not going to find anything that's 100%. You just have to go off of probabilities and percentages and like win rate, whatever. This takes the high and closes like, that's a shitty close. We're going to expect the high because it's a bullish candle, right? High gets taken, closes back below. We're expecting the low now. Oh my god, okay. Closes below. We're expecting this again. And by the way, this is like, I know it doesn't look like much, but this little move from close to low is 100 points. So you can easily like catch a move in this little fucking range. You can just scalp too with like the previous day high and low as your bias, if that makes sense. You don't have to hold to the high or low, even though you're probably going to make more money because this is so high win rate. Closes below, takes the low, closes below again. We want the low to get taken. This is a fail because the low doesn't get taken. It's a bullish day. So this is kind of 50-50, but it's a bullish candle, so we're going to expect the high to get taken, which it does. It closes back below, expecting this low now to get taken. I think you guys get the idea though, but like, yeah. Closes below. We want that low now. That's like a 140 point move right here. That fails miserably. Closes above. We want this high now. That gets taken. We absolutely fucking dump. This also gets taken, but this is the bearish candles. We're going to expect the low. Low gets taken. Closes below. We're expecting this low again. Oh my god. Right. This one is kind of tricky because you have this huge fucking gap. And we have this huge opening, new day opening gap, which is, oh no, never mind. This is a new week opening gap, so that's even worse. We're not going to expect price to come all the way back down here when we have this huge new week opening gap. So we're going to expect the high on this one. Also because of this huge wick. Like, if price retraces this much, it would be kind of dumb to expect us to come all the way back down here. Especially when we have this huge fucking gap right above. I'm gonna make a separate video on gaps, of course, but yeah, that's just new week opening gaps is the most powerful PD array there is. So fading this PD array is so fucking dumb, bro. It works sometimes, but you don't want to fade this, trust me. The high gets taken, the gap gets filled in a little bit, rejects, takes the high, closes back below the high. We want the low to get taken, closes below the low. This closes below, we want the low to get taken. The low wow, nice. Sweeps right into the CE of this wick. which is exactly what we have in the trade breakdown, which is also going to be part of the wick theory channel that I made. Could have caught this, you know. Bottom tick. So beautiful. So sexy, bro. Anyways, comes up here, closes above, takes the high, blah, blah, blah. I think you guys get the idea. I don't know why I did this with this whole fucking price leg, but yeah. Yeah, that's pretty much it. Hopefully you guys did understand this. This is like what I do every day when I log onto the charts. This is the first thing that I just mark out just to have a bias that's like clear. So yeah, I think that's pretty much it. This is, as I said, this is part of the top-down analysis, or like the first step of the top-down analysis, and then obviously there's more steps, but this is going to be just the PXL, PXH video. So hopefully you guys understood this. It's not very hard to understand. But yeah, just if you have any questions about this, just send it in the normal chat or the fucking questions chat that we made. That's just like fucking brain rot. But anyways, right. Goodbye. Right, so this is going to be a video on daily bias. Bro, are we almost back at all-time high? Fuck. Oh, it's right there. Shit, okay. What the fuck? That's inconvenient. Alright, anyways. So, other than the previous day high and low, which hopefully all of you guys have watched, I did talk about session highs and lows in that video, I think, but this is like a bit more advanced, or like, would you say, more precise, I guess, as an intraday bias. So what I always look at with these session highs and lows is like what initiated the move of Asia high, London high. Like, is there a reason? Did London high tap something that makes us want to be bearish for New York session, or is it more like for me today? Let's look at the daily, right? On the daily chart, we see the previous day high and low strategy. According to that, this high is going to be my bias for the day, right? So, like, obviously Asia is always kind of shit. I'm not expecting anything from Asia. But you see in London, like, we sweep Asia highs. So a lot of people would think like, okay, we swept Asia highs, we're now moving away. Which then brings us to this move right here. If you guys were in the live yesterday, I said what I wanted to see tomorrow, because I think one of you asked. You just asked, like, what's the bias for tomorrow? What do you want to see for tomorrow? Blah, blah, something like that. And I said I wanted to retrace into the 4-hour imbalance, and then I would only be focused on taking longs. And that pretty much goes for like the whole of December, because we're at all-time high. We're in December, Christmas rally. We talked about this in the live yesterday, so for those of you who were in there, yeah. So yeah, this is what I wanted to see. And then today I did not take anything off of this because there was news at 10 a.m. I think I was at the gym until like 9:50, so I was literally I got home right before news. I wanted to kind of see the action clean up a bit, because this was just giving me actually like proper brain cancer. But yeah, I think I just derailed a bit. But so what I wanted to see was this high to get taken. London did not take out this high. If London took out that high, then I would be more cautious with longs. But because we left that high and we tapped into this 4-hour like I wanted to see, I just wanted to be long biased the whole day. I am pretty happy that I did not get chopped up in this.
I was in the chat with a lot of you guys when this was playing out, just kind of, yeah, telling you guys what I wanted to see. Wanted to see previous day high. And I don't know if anyone else took this setup. I saw a lot of you guys took some nice setups today, which is good. Where is the... wait, I'm so confused. What the fuck? It is Tuesday today, right? Yeah, okay. Right, what I'm trying to say is... fuck. Hold on. Oh my god. What initiated that move from the previous session higher low? Oh my god, is that... what? 1, 2, 3, 6 equal lows to the tick on NQ? That's fucking crazy. What? How the fuck? Okay. Bro, my brain is so fried from this price action today. I can't even think properly. But yeah, anyways. After the previous day high and low, bro. Oh, I'm so tired. Fuck. You wouldn't just like scale down in time frames after looking at previous day high and low. You want to look at previous session high and low. If London high or low tapped into something significant or swept something significant, then your focus is gonna be expanding away from that, right? I think I said this like 14 times already. I don't know why I'm repeating myself. Yeah, and then other than that, it's just gonna be like validation and invalidations of PD rays. So, for example, a inversion of like a 15-minute fair value gap or a 5-minute fair value gap is going to tell you a lot about how or where price is going. So today I felt like we have a clear bias. This is just fucking insane price action, but it's kind of what I was expecting from December and all-time high conditions and all that. I'm probably going to de-risk. I already de-risked like 50%, but I'll probably just fucking trade evals for the rest of December. So yeah, I feel like I forgot to say something again, but I'm gonna make more videos if I remember, because my brain is literally fucking fried, bro. Alright, good fucking bye. Market maker models. This is from today, and I'm just gonna get right into it. So what's the first thing you're going to look for when you see a market maker model? It's going to be your typical confluences with your like this engineered liquidity. We have this new week opening gap with some liquidity right above it. That should stand out to you. And then we have this consolidation right here. If you didn't watch the ICT video that's in this channel, I'm just going to explain it really quickly how to identify this. So the original consolidation is gonna be like one of the biggest things that's gonna be able to help you identify a market maker model. Almost every market maker model has a original consolidation and then a buy side curve and a sell side curve. So we see this massive accumulation down here. I'm gonna delete it because it's fucking annoying. And then we have our buy side curve, and then when you get down to this area right here, you should be able to identify, okay, this is going to be a market maker model. So how do you use this for precision entries? So we see we have swept some liquidity right here into this order block, which is going to be our smart money reversal. And then this is on the 5-minute, by the way. This is from today. You can see we have this failure swing down here above this new week opening gap. This immediately should just stand out to you. You don't have to catch the top of this, because a market maker model usually offers like a lot of precision entries. So we're going to start using breakers for this. If you don't know what a breaker is, it's just it's a high and a low and a higher high, and then that gets traded through. That's going to be our breaker. And breakers are going to be the biggest part of your market maker entries. Also, first thing you should do every time you get on the charts, mark your midnight open. If you haven't watched the key open video, I suggest you go watch it. You can see we leave this, I guess you could call this a unicorn, but when we close below this orange line, we form this breaker, and this breaker lines up nicely with our midnight open in this 5-minute imbalance. And we're gonna enter right there and ride it, oh my god, ride it all the way down to this level right here. This would be your take profit. And then if we, I mean, this is an ideal scenario. This is from today, so these setups happen pretty often, you know. And then we also have a this was the market maker sell model, and here we have a market maker buy model. And the reason I like this is because we have these relative equal highs. I think this was an Asia high and this is a London high. So this is pretty clean. This is a nice target, you know, for a market maker model. Now we also have, oh my god, where did that fucking, all right. We also have some consolidation up here in this market maker model. And this is on the 1 minute, but I'm going to use the 5-minute because it's cleaner. If you're going to use market maker models, I've found that 5-minute time frame is the best to use. But same principle. We want a candle closure above this breaker, and our breaker is just, in this case, our low, high, lower low, closure above, higher high. And then if we extend it to the right, hold on, bro, there we go. Extend it to the right, you can see that it gave you 2 entries. The reason you can't enter, like, look at this, it didn't close above, it just kind of swept it and then it had a retracement leg into this 5-minute fair value gap. You really want is this strong close, and then you got this 5-minute imbalance on top of this 5-minute breaker. You don't need the imbalance to be right here, but you can see like it's very clean. We swing below midnight open, which is going to be our daily discount level, into a, you can either use this one or you can use this one if you want an even better entry. Let's do it with the line because you can't really see it with the box right now. It's going to give you that clean entry, you know. You can either use this one with a bigger stop or you can use this one with a smaller stop. They're both kind of in the 5-minute imbalance. As you guys know, I like to use the 50% mark of every imbalance just so that my risk is better. So I would have used this one probably. But you can do whatever you want. If you like slightly bigger stops, you know, that's up to you. But I just like precise levels with small stops. So my stop loss would like be probably 5 points, because this is like you would enter at 44, and then your stop loss would be like 39 or whatever, up to you. That's what I would have done with my risk model. And then you just target these equal highs or relative equal highs. So yeah, a market maker model is essentially your bias, and then breakers is going to be the essential entry trigger for your market maker model, and then obviously imbalances, great bonus, and then you want a swing above or below your midnight open for it to be like A++. So that's how I use market maker models for precision. And yeah, let me know if you guys have any questions. Thank you. Bye-bye. Hi, welcome back, motherfuckers. Right, so you guys wanted me to make a video on trailing stops. Now, today I didn't really follow this. I just fucking trailed like a maniac. Because I'm gay, but this is how I would normally do it if I was actually like in a trade that I wanted to hold. Today, as I said, I wasn't gonna trade today, but I got this level that was just too clean for me not to take. So I did micros, tight risk, tight trailing, all that stuff. Made some money. So yeah. But the first thing... Oh, what the fuck? Right. So, you see I got my entry, right? So after this 1 minute changes to the delivery happened, I would either, like this is the break-even trailing, just like the first step in trailing. After this candle right here, after we get this change instead of delivery, I would either always trail my stop to the low that we made or my break-even. In this case, like my break-even is basically the low, so I just trail it to break-even. But yeah. The next valid trade or trail for me was the first one was when we swept these equal highs. Usually what I do is if we tap into like 3 minute or 5 minute or 15 minute bearish structure, in this case because I was in the long, I would trail my stop to below the last 1 minute order block. If you don't want to do that, you can use 3 minute or 5 minute. Today I used 5 minute because I was doing micros. So yeah. And then also I usually just trail my stops to like the swing lows that get created. So after, we create this swing low, and then that kind of becomes a valid one when we take out this high. That now becomes a valid swing low where you can trail your stop to. But this is like too close to my entry, so I just kept it at break even. Didn't want to bother. But here, for example, we reject this 1 minute order block, and we come down, rebalance, make this swing low. Now, I would trail my stop as soon as we take this high. I would trail my stop to here, which is 20 points, which is valid, especially if you're on minis. I would trail my stop there. Why is that a good place to trail your stop? Well, bro, what the every time it does this shit. Fuck off. The reason that is now a good swing low is because we closed above this down closed candle. And as you guys know, every every down closed candle that we close above should support price going up, which is exactly what we see here, right? We close above it, and then we come back down, testing the opening price of that candle, and then we continue to expand. Now, the mistake that I made was that I trailed my stop to 170, which is like, it's like right at this down close candle, right? This candle should support price going up. Realistically, what I did first, I have a screenshot of this, I trailed my stop to 160, but then I was like, fuck it. I'm just gonna fuck off today. The reason that I'm that aggressive with my stops, even on micros, is because I'm on 14 accounts. So like $100 is like $1,400, and it's like $100 if I'm using micros is 1 R. So I'm trailing my stop like 1 R up, 1 R up. And I got stopped at exactly 170, which is gay. I realized that was a mistake. I should have just kept it here at 160. But then what would have happened is that when we took out this high, I would probably do something gay, like trail it to 180 just to be like a motherfucker. Which, like, I didn't really want to... I don't see myself holding through all this bullshit ass. Like if you look on the one, sorry, I used my mouse again. If you look on the 1 minute, it's just painful price action, isn't it? Like this, I'm. The reason that I trade the way I trade is because I'm impatient. I'm just fucking impatient. There's like, yeah, there's something I can do about it, but I just hate sitting in this, bro. I don't like sitting in a trade. That's why I'm trading like I'm trading. And so I was like, yeah, I'm gonna make like almost $6,000 if I just trail my stop here and go on about my day. So that's what I did. I'm not mad about it. It could have reversed. It could have trailed me out at 160 and I blah blah blah. Whatever. Coulda, woulda, shoulda. Doesn't help. Right, so I think I covered swing lows or swing high, swing lows as a way to trail your stop. Just like as soon as we start retracing, like here again, like we have an example right here. We retrace down here, we create this swing low, and then as soon as we take this high right here, you would trail your stop to the swing low. And you can just keep doing that until you get stopped out, right? It's gonna really maximize your profit potential, and it's often gonna, like what you can do as well is if you do 2 cons, you can trail 1 con and keep 1 con at break even. Like there's a bunch of ways to do this, but also like 5-minute structure is probably the best and safest way to trail your stop, I would say. Oh shit. So like right here, you trail your stop below this 5-minute order block, and then same here when we close above this, we trail it below the 5-minute order block. Like you guys are seeing how these down close candles are just supporting price going up, right? That's why I'm like a fan of trailing my stops there. So you can do that, you can do swing lows, you can swing lows and highs, you can do both. Like it's just all based on like opposing structure. So like 15-minute fair value gap, I want to trade, secure some profits in case we reverse here. Nobody knows what's gonna happen. Like for 100% certainty, I was bullish until London high, of course, but like it could wick you out and then go blah blah blah. You want to secure profits. You want to play defense as much as possible. Defense is the best offense, right? You want to keep being in this game for as long as possible, and the best way to do that is playing defense. Trust me, I know. I've traded all sorts of fucking ways. I've traded with huge runners. I've traded with small trades like 10-point take profits, blah blah blah. I've found that the way that I'm trading right now is the easiest way. Trailing your stop where it makes sense, and then have like a minimum profit day, maximum loss day, and just stick to that, honestly. So yeah, if you guys have any questions regarding this, like stop loss trailing, then just at me in the questions channel.
Right. I was gonna do a trade breakdown, or actually like 3 or 4. I don't remember. But we're gonna do something else right now. I'm gonna do that later. Right now, I'm gonna do a fucking psychology / risk management video. And we're gonna do a challenge today. If you don't do this, you are gay as fuck. So, I want everyone to do this. This is the risk plan that I follow every day. And it goes like this, right? The first trade you take is going to be your normal size. You're going to find a level that you like. You're going to do your risk however you like it, whether that's a 10-point stop, 15, 20, 5-point stop, whatever. And you're going to do a decent risk to reward. By decent, I mean 1 to 3 or above. And I encourage you to actually take a loss. Don't try to take a loss. Don't take a bad trade. That's not what I'm saying. But if you take a loss on that trade, good. I want you to think to yourself, that's good. Now, I want you to de-risk 50%, do half size. So if you did 1 mini, now you're going to do 5 micros. If you lose on that trade, then good, right?
By the way, if you win on the first trade, you're done. You're gonna log off the fucking charts. No matter how big that win is, you're gonna get off. Now, if you lose that second trade, good. This is the challenge. You lose that second trade, you're gonna either take one more trade, 50% of that 50%. So you're gonna do, let's say, do 3 micros. If you lose all 3, you're dead wrong. Your bias is wrong. There's something you're not seeing. You're gonna log off the fucking chart. You're gonna click this fucking button. You're gonna turn off your buy sell buttons. You're gonna log off. All right? Like fucking like this. Log out. Boom. Now, after you've done that, you're gonna walk away. You're gonna slam your fucking computer shut. Not because you're mad, just fucking, you get what I mean. Just walk away. The problem with you guys and the way you're trading is that trading should be like day to day, on a day-to-day basis. It should matter zero. It does not matter what you do. It does not matter if you take a loss or two, as long as you have good risk. If you win, doesn't matter, good. If you lose, doesn't matter, good. Now, this is the challenge. The challenge is to walk away. I'm going to protect the fuck out of your account today. It's PPI. We might get some good price action. It's probably going to be a bit volatile. But the problem with the way you guys are trading is that you're letting the day-to-day matter, which is just fucked up, right? A loss does not matter, a win does not matter. But the way you guys are trading, you're taking a loss and then you're revenge trading until you either blow your account or you're happy with the profits you made. And that doesn't work because you're making the day-to-day matter. If you lose $300, it does not matter. You might be green on the week. If you make $800, it does not matter. But if you blow your fucking account, then the day-to-day matters, doesn't it? Or if you hit DLL, I mean, you haven't blown the account, but still not good. Like, I don't know how to make you guys understand this without actually doing this challenge. I mean, we could do this every day. I mean, whatever it takes for you guys to actually understand this. But I want you guys, or I mean, at 4:30 p.m. today, New York time, after the market's closed, I'm gonna at everyone and ask you to send your P&Ls. Now, if your regular size is 1 mini, then you should be down anywhere between $300 to $400. If you're down more than that, you're gay. Okay? If you're up, then great. But if I see a P&L that's $300, $400 red, I'm going to be happy. And you should be too. And you shouldn't even, yeah, it's going to feel worse than a loss. No, than a win, but it's going to feel good because you didn't blow your account. And that very well could have happened. Especially on days like these. Red folder news days. So I want you guys to write this down. You're going to do one trade, full size. If you win, you're done. You take one more trade, half size. If you win that and you lost the first one, you're done. If you lose both, it's up to you if you want to take another trade 50% with 3 micros. You don't have to. I usually don't, because if you lose 2 in a row, you're like, ugh, you're wrong. There's something you're not seeing. If you lose 3 in a row, you're absolutely fucking done. The goal here is to make the day-to-day so insignificant and so meaningless that you're no longer emotional if you take a loss. Because I bet my fucking ass that you go into the market and you're like kind of nervous because you don't trust yourself. So you're like, ah, shit, I really hope I don't blow my account today. I used to be the exact same way. I was nervous going in, logging onto the chart because I was like, ugh, today might be the day where I blow my account. Fucking hell. And you're stressing because if you take a loss and you're like, oh, I really wanted that payout tomorrow or like next week or whatever, I have to make that back right now. And then I'll get off. Break even day, and then I'll get off. And then you end up blowing your fucking account because you're wrong.
And it doesn't feel good to be wrong, so you wanna revenge trade to feel right and to feel good. But the problem with revenge trading is that the risk to reward is so fucking bad. Because either you're up a small amount, or you're at break even, or you fucking blow your account. So it's all risk and no reward, essentially. That's why I want to do this challenge. So at 4:30, after markets close, you're going to send your P&Ls in the Iron Mind checklist. I just want you to send your P&L. Nothing else, because that channel, let's keep that channel kind of, let's not get messy in there. But that's what I want you to do. And I want you to think to yourself, like, if you take a loss, good. The challenge right now is to walk away. Because, bro, I know you want that car, you want that house, you want that girl, you want that money in your account right now. But if you keep doing what you're currently doing, you're not going to have either. You're not going to have any of it. Ever. That's how trading works. The best traders I know, they take 3 losses and they get off because they recognize they're wrong. That comes with experience, obviously. If I could, I would, but I can't give you the experience. And I'm not going to pretend like I'm fucking flawless. Like, I revenge trade too sometimes with micros just to like feel like I'm right, but it rarely goes right. If I'm wrong on the day, like my bias is wrong, and I get emotional, like things are gonna get ugly. Like, I know some of you wanted to short this last night or yesterday because it's so imbalanced. Like, I see it too. This looks fucked up to me. Like, if you check the 15-minute or the 5-minute, there's no real retracement here. It's just fucking straight up, which we know that the market likes to rebalance. So like every little retracement here, you're like, oh, okay, finally the shorts, chain instead of delivery, let's short this. Bang, get fucked. There's a bunch of lower time frame fair value gaps in this. And I bet you a lot of ICT traders got fucked trying to short every one of these tiny retracements. Because they're like, oh, it's so imbalanced. We're going to rebalance. And then it just never fucking does. That's why I'll tell you, if you take 3 trades and you lose, you're wrong. It's not going to rebalance. These days happen. And I know that I used to, like let's say we finish this market maker buy model, and like the first retracement, I'm gonna be like, yeah, we're gonna bank off this short because this is so aggressive, and so we're gonna rebalance, blah blah blah. And then I would literally be so mad at the market that I would take my stop loss off, and I would sit there and watch this fucking bullshit. I would literally blow my account with micros because I didn't have a stop loss, and I would sit through a fucking 300 point rally with micros and lose $3,000 and blow my account. Because I was so mad at the market. Fuck this market, It's wrong. I'm right. That's the fucking general feeling I had when I saw this shit. And now, with experience, I'm like, okay, this is going to be one of those days. I'm just going to stay away. I don't want to long up here. Like, it's just one of them things. But I want you to protect your account today. I want you to do this challenge. If you don't do this challenge, you're ugly fat piece of shit that does not deserve money from trading. Because if you think about it, you're trying to make way more money than people who have went to school for 5 years and are working 8 hours every day. You're trying to make more money than them in a shorter time span. And like, bro, everything is just, I get it. I used to be the exact same way, but just please do this challenge today. 2 losses, 3 losses, you're done. And then you're gonna send your P&L to everyone at the end of the day. If you send a fucking DLL or a blown account, you are gay. So, yeah. That's pretty much what I wanted to say. Just don't let the day-to-day matter in the degree that you're currently letting it matter, because it's not going to work long term. You're never going to get that car. You're never going to get that house. You're never going to get that girl. You're never going to get any of it if you keep doing what you're doing. Do one model today. One, like, if it's market maker model, if it's a wick theory, if it's a fib, you know. Do one of them. And just take that loss. If you take the loss, good. I want you to think it's good. Because it is. It's gonna be a way bigger investment for you to take a loss than a win, because you're gonna learn way more from it, especially emotionally. So yeah, that was holy yeah. I don't know how long this video was, but I'm gonna do some trade breakdowns and then yeah. So we're gonna do this challenge. If you don't do it, you're gay. 4:30, I'm gonna add everyone. Send your P&L. So don't be one of those fucking dumbasses with a blown account. Right. Okay. Goodbye. All right. So this is going to be the first official lesson that's not, I mean, this is also a trade breakdown because this is a trade I took, but I feel like that's the best way to do it anyways. Just so you guys know that I'm not like choosing a random point in price where this worked. So yeah. This is if I were to just throw everything out the window and just focus on one thing, this would be that one thing, but it's still very simple. So the problem that I have with teaching is that I don't know how many of you are experienced traders. I don't know how much knowledge you have. Some of you I know are good traders. You know a lot. I know a couple of you are pretty new, especially to this. So I think I'm just going to start pretty simple. And yeah, I feel like this concept is like the simplest but most effective. So, right, we have up closed candles and we have down closed candles, right? For the down closed candles, we have the open, low, and the high, and the close. And for up closed candles, we have the open on the bottom, close the top, low, high. You get the idea, yeah. So when we, by the way, for those of you who don't know, this is going to be basically a CISD or change in state of delivery / order blocks, I guess. This is what gives you, I would say, the best read on the market, especially if you go like weekly, daily, 4 hour, 1 hour. 15-minute is good. But yeah, anyways, so a change in state of delivery is just, let's say we're bullish, right? We want then the next candle after this one to close above the opening price of this down closed candle. And when it does that, we want it to come back down, test the opening price, and then expand to the upside. So, wait, let me put the line so you can see the price level. Right, 18,152.5. The next candle is going to close above this candle, And this is when, oh, shut the fuck up, bro. This is when I gave this signal. It's from May. It's just a really, really clean example of a change in state of delivery on the 1 hour. The other confluences we have is that we're below true day open. We barely have any trading above true day open. That's usually a good indicator of this leg down. This leg down is gonna be manipulation, right? Because we're also hold on. We're also like right around market open, which is like, yeah, this candle is basically market open. So we have the pre-market Judas down, and then we're below true day open. We barely have any trading above true day open. And so I'm bullish. I want to see us expand to the upside above true day open, and preferably we get this entry before we tap into true day open. So if we, oh my god, can I find the fucking, how do I need to favorite this bullshit, bro. Hold on. Nope. 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 All right, yeah. So if price does this, then it's gonna be lower probability. I don't want it anymore if that's the case. However, if we do, okay, thank God. If we tap into this before tapping into true day open, I'm gonna have a separate lecture, by the way, on true day open, how to use it, when to use it, what it is, why it's important, blah blah blah. So don't worry. Anyways, if we do this, then I'm in, you know. So when this candle closed at 9 a.m., I get, oh, shut the fuck up. I gave the signal longs 18153. As you guys know, I always account for 2 ticks of spread and just like fuckery, randomness, whatever. And if you really like, what you can do with this kind of, it's not a it can be a strategy in and of itself. You can just trade this and with good risk and just be done. What's sensitive with this candle, or what's most sensitive with this candle, is going to be the opening price. So if we scale down a bit, we can see, we can put our entry 2 ticks above the opening price. We can put our TP at true day open, and taps you in, touches the opening price. Let's say you did a 5-point stop. I think that's what I did on this one. It was either a 5 or a 3. I don't remember. 3. Okay. Anyways, taps you in, very minimal drawdown, and yeah, just rips up to true day open, which would have been my TP, and continues trading above it. So, note this, by the way. Anyways, that's for another time. Yeah. So the difference between a CISD and an order block, this immediate like rebalancing wick you see here, this is a CISD. When we close above, we come back down into the opening price and test it. That's what I call CISD, or change in state of delivery. This is more like a order block scenario where we expand away from the down closed candle. Orders are accumulating down here, and that's what's called an order block. We come down, test it, expand up. You get the idea. Yeah. The biggest thing, if you're not familiar with this, is just up closed candles should support price going down, and down closed candles should support price going up. And that's on every time frame, monthly, weekly, daily, 4 hour, you name it. Like even 15-second. When I'm scalping on the 15-second, oh fuck. Okay. Anyways, when I'm scalping on the 15-second, this is usually what I'm doing. I'm just looking for us to tap into a PD array or sweep some liquidity like a swing point. And then I'm taking the first 15-second change in state of delivery. It's going to be super, super quick. But usually, like, it always delivers. Not always. I can't say always. It's not 100%, but nothing is. But, like, very, very, very often, you can, if you're scalping, you need a couple points, like 10 points, whatever. A 15-second CISD, it will retest that opening price fast as fuck, and it will just expand down to, like, let's say a 1 minute FEG or whatever. And what's also nice is if you get you get this paired with like a inversion. So let's see if we can, bro, can I? Okay, we don't have historical data for this resolution. Blah blah blah. Okay, I guess not. Anyways, let's say there was an FEG, like, let's say there was a tiny FEG right here. There's not. I'm not saying there is. Let's just imagine that there was a tiny FEG right there. A 1 hour FEG. This candle right here would inverse that FEG, and we would have a change in state of delivery. This is a really, really good change in state of delivery. Like, if you want more confluence, then this is like perfect. Yeah. I think that was pretty much it. Just remember, down closed candles should support price going up. Up closed candles should support price going down. Every time frame, all day, every day, all the time, in the direction of your bias. It does this all the time. I think we're gonna make channels for each lecture. So if I forgot to say something right now, I'm gonna make a quick video saying it, and I'm gonna upload it in that channel with this video. So yeah, this is my first time teaching anything ever, so like, just have some patience. I'm gonna get better at this. All right, goodbye. All right, this is gonna be a video on the opening gaps, new week opening gaps, new day opening gaps. I'm gonna explain. If you don't have these on your chart, please put them on. It's called the ICT NWOG by Lux Algo. It's literally the only indicator I use. This, kill zones, whatever. And put the last 4 or 5 new week opening gaps. Put the last 4. And then turn this shit off. And turn this shit off. And it should look like this. Whoa, no, that's fucking wrong. It should not look like that. 44, bro? Damn. That's crazy. Alright. Okay, so price refers back to these gaps a lot. And the absolute best way to use them, I don't know if I can find one right now, because it doesn't do this very, very often. This is like, this is mid, because it kind of retraced into it, but I'll use this for just showing you. So the best way to use these gaps are when they jump up like this and they just kind of rally without tapping in back into them. That's like a free bias going into the next day. So you see how we come down, completely fill it, rally, come down. We'd start fucking
bouncing around inside this new week opening gap. Like here you can see we bounce off an old one. Like it seems really, really random. But just watch them. This is kind of hard to teach. I would kind of treat it as a key open, like you wait for a candle close above or below to actually enter on it. You can use it as gap fill like this. We get the complete fill of it, and then rallies 60 points. Like any of these levels that I teach, if you use good risk with all of them, you can basically just enter blindly with good risk, like high RR, decently high RR, and just use your brain, bro. You're gonna be profitable, and don't be dumb. Keep sticking to your rules. The rules that I gave you, like if the first trade is a win, then get off. If the first trade is a loss, de-risk 50%. If that's a loss, get off. If that's a win, get off. Stick to that. Stick to the levels. Do good RR, 1 to 3 minimum, preferably 1 to 4. And yeah, you can just fucking treat this as a fucking video game. So here, like, we accumulate a lot in this new week opening gap, come back, retest it. Obviously, you want to combine it with other levels. Order blocks, fair value gaps, key opens, fibs, great. Combining this with. But yeah. If you see a gap like this, a new week opening gap or a new day opening gap that is unfilled, like there's zero trading inside of that gap, that's a free bias. That's going to be your bias. If you have another bias, you're gay. Okay? So you'll notice these levels getting tapped all the time. Just don't get FOMO. Like, use your brain, combine it with levels. I'm giving you guys a lot of levels to look for, which could result in over trading. But yeah, don't do that. That's gay. So like here, if you don't want to soup this or like enter directly on it, just like use the fib, use all the tools you got. Use the fib, use the order block it creates, Yeah. Imbalances. There's a bunch of, like, if it taps into a good level, then just do the entry that it gives you, right? And like, even like, you can do 1 minute, but like, oh my god, I fucking hate trading with you, bro. You can do 1 minute, but I think a lot of you guys would just really improve with just sticking to the 5 minute, doing 5 minute entries, because you're gonna be watching this. Let's say you enter on this wick, you come down, you panic, blah blah blah. It comes up, you're like, oh yeah, great, it's coming back up, and then it's coming back down. You panic again. Like, if you just look at the 5 minute, it's gonna be way less stressful. Or just set and forget. I think that would benefit a lot of you guys. But yeah, just know that if you see an empty, like a gap with no volume inside, just know that 95% of the time we're gonna come back and fill that gap. And like this as well. Wait, let me change time frames. This is like a good setup, right? Rally, rebalance, come back up. Like, we spend a lot of time in the gaps, and then we kind of break out of it. You would kind of, even though this sounds gay, you're going to use it as a break and retest. And combine it with other sensitive levels. Right, so the other form of opening gap that we have is the regular trading hours gap. So usually your chart is going to be set to this, electronic trading hours. If you go to the bottom right of your chart, you're going to see this little square, and you're going to press regular trading hours. Now, if we do that, we can see today we have this gap. Basically what this does is it's the gap from yesterday's close to today's market open at 9:30 instead of the 1800 open. So, oh fuck. This is gonna act as like a usually. This is gonna act as a like an actual volume imbalance, even though it's like technically not. It's gonna get filled often, like a lot of the times. So like if you're unsure of your bias, then you can look at this as a confluence. It's not like enigma, it's not an everyday type of thing, but oftentimes we fill the regular trading hour gap when market opens. So like if we have you can combine this with the Judas swing. If you don't know what that is, just a manipulation leg. Oftentimes we leave this regular trading hour gap, small or big. We can fill it as a manipulation and then absolutely just rip in the other direction. But like we've had this price action, bro, for the last 2 weeks. I don't know what's going on. It's very hard to show you guys actual good examples with this price action. But yeah, you get the point. It's more of like a bias thing. Oftentimes also it reacts to the 50% mark of it, but yeah. Also that new week opening gap video I made was apparently way too long, so maybe I should make another one. Fuck. Alright. Bye.
Alright, hopefully this is recording. Here we go. Let me just... Right, okay. I'm gonna start with this trade. It's pretty basic trade. I know a lot of you guys know a lot of ICT, you know a lot about the market, blah blah blah. Some of you though are completely new to trading, new to these concepts. So I'm gonna start out pretty simple, and this trade is pretty simple, even though it's like a complete bottom tick. That's what I like about this strat. I like to keep it simple, and the risk on this is obviously pretty small because that 486 level is really specific. So I would keep a really tight stop on this. Anyways, let's get into it. Okay, let me just go into replay mode. Hold on. Right, we're somewhere around this area when I called out the level. So we have this unmitigated for a weekly FxGhani, and the reason I have these, if you don't have this 50% marked on your rectangles on TradingView, I suggest you do. The 50% mark of like PD arrays, like imbalances, order blocks, breakers, etc., are usually the most sensitive spot. So that's usually mostly what I use for these levels. Anyways, we go weekly, we have this level right there. We go daily, I want to see a level that lines up with this 50% mark. So after some time, your eyes will start to actually just see these levels right away. They're just there, your eyes just attract to them. For me, I see immediately we have this daily breaker inside of this weekly imbalance.
where does the breaker high line up? It lines up perfectly at the 50% mark of the weekly imbalance.
What else do we have here? We have this closing opening price, sorry, of this down closed candle.
And if you're not familiar with this concept, it's really simple. It's just once we close above this down closed candle in this uptrend, or any down closed, if we close above a down closed candle, that down closed candle should support price to go up. So we should tap into it and then reject off of it and continue to the upside. Anyways, that's the daily. I usually go 4 hour, 1 hour, 30 minute, 15 minute, just to see if there's anything else. In this case, it's like I already have these two levels so specific that it's usually enough to just go off of that. Obviously, I would like to see more structure coming closer to this level. We also have this low above our level, which means I call this engineered liquidity. We put this low in right above our level, so we sweep liquidity into that level, which gives me even more confidence to go into this trade. Let's fast forward so we get closer to the actual level. Oh my god, bro. All right, hold on. All right, here we go. What time is it? All right, hold on. So we sweep this low now. Did not touch the level yet, so I'm not in this trade yet. We go down into the 15 minute. We see that we start to accumulate above this level, which is fucking perfect. That's exactly what I want to see. Now we can get a clean AMD. If you don't know what that is, it's an accumulation, manipulation, distribution, which means we accumulate right here. I want now a manipulation below this low, which would be straight into my level for us to then shoot up. And that's pretty much exactly what happens. Eventually, at least. There you go. Taps my level. I would go stops to break even immediately after this candle kind of retraces. The reason for that is because we now tapped my POI, or my point of interest. I don't want it to dig any deeper below my level, because that's my level. I've seen this level get ticked 100 times before watching the price, and yeah, that's just how I trade. Anyways, this level is so specific that you can just use a 10-point stop, 5-point stop. When it's higher time frame like it is right now, we got weekly and daily, I usually do 10-point stops, just because the 50% area is what's sensitive. So like minus 1 or 2 points, you know, so I would just keep it 10 points just for safety, and then trail it to 5, and then trail it to break even. Makes sense? Good. Now for targets, you could target whatever. You can target like this low over here. I think there's a 4-hour gap here, like a 4-hour volume imbalance. Right here, you could target this. You could do TPs, all that good stuff. Yeah, anyways, tapped our level, the level I called out the day before, 486. It's set up really nicely, and then it just shoots off. Right, so another trade breakdown is going to be the one where I gave the signal with the 2-point stop. And yeah, let's just get right into it. So to start off with this trade, I just went on the 4-hour. That's what I usually do. I start at the 4-hour, and then if I see some good 4-hour structure to go off of, I will then like check daily to find some levels, weekly, potentially. And yeah, just go 1 hour, 15 minute, blah, blah, blah. Anyways, so this, I haven't done like a lecture or like, I haven't taught you guys this yet. So this is just going to be like the reason for taking the trade and just like a quick explanation. I will teach this in more detail later. But yeah, anyways, this trade is a wick CE and it's a 4-hour wick CE. The reason this is a good wick is because we have these highs right here, which have been swept. We have this high right here. We don't want that to get taken, which it didn't. Wait, let me just remove this. Hold on. Okay. And then we also engineered some liquidity right here, right below this CE of this wick. Now, why would I just take this short specifically? Well, we have some sell side down here, which would be my bias. I guess this would be the real sell side. And if you go on the 1 hour and we mark our true open, hold on. Let's find the bitch. Oh my god, am I stupid? No. Yeah, our true open right there. We have our 4-hour wick CE right here. So the reason this is good is we have this 4-hour wick CE, we swept liquidity with this wick, and we engineered liquidity right below the CE of this wick. Something else to look at, like if you're gonna find some levels, is just, you know, start marking out your other 4-hour levels. You can go like daily. Look, okay, we're inside this daily order block. So we're gonna look for sells, you know. Weekly, same thing. You just want as many confluences as possible to find that one specific level. Okay, so we're above our true open for Thursday, which is the midnight opening candle. And what that tells us is look for shorts, essentially, if you got a bearish bias, which we do because we have the sell side down here, right? So let's just try to not fuck this up. Right, okay. Where? Let me check. Market open. Market open. Right there. I think we held this through market open, so we got tagged in before market open, like very soon. And this is also very good, like we're engineering these equal highs, which is just giving us more confidence to sweep it and go down. There you go. We tap into this. I signaled the short at like 210. The wick exactly is 1050, but you gotta account for like spread and tomfoolery and fuckery and that shit. And with a 2-point stop loss, targeting true day open, that's a 25 RR. Oh my god, that's so small. Yeah, so letting this play out, we see it starts getting a reaction and then market opens and it has a like a wick up, if I remember correctly. Yeah, right here, this wick. No worries though. I think at market open I put my stop loss to break even, but like it's 2 points, so whatever. And then yeah, smashed the TP. I've seen, like, this is the way I've been looking at price for months and months, and I see these levels getting ticked all the time, and I just thought I have to use this. This is why, like, you can be profitable with almost any strategy. You can be profitable with trend lines, support and resistance, blah blah blah. But the reason you join this mentorship is because you want more, I'm assuming. You want more, you want to be
precise. You want these sniper entries. And when you start looking at price like this, I mean, you can't fucking lose, because if you do this consistently, like you can lose you can lose 9 out of 10 times and still be super profitable. So obviously we don't want to lose 9 out of 10 times. We want to do this consistently, but you get the point. So yeah, that was pretty much it, I think. After this, this is probably gonna be the last like trade breakdown before I start actually teaching these concepts, and just you know, I'm gonna go through like concept for concept in like separate videos, one video for each concept, or like each PD array, blah blah blah, whatever you want to call it. And then the trade breakdowns is just me putting it all together into one trade, and yeah, that's pretty much it. So I'm gonna start pumping out some videos more frequently. I finally figured out this fucking QuickTime player, so hopefully this quality is a bit better than the fucking OBS bullshit. Yeah, I'm kind of hungover, so yeah, I'll do my best. But right, this is the 19936 level that I called in the free chat like a while ago. I don't remember. Anyways, first thing I do is go 4 hour. 4 hour. We see we have this this order block, or this 4 hour open. Then after I identified some 4 hour structure, we go daily. And on the daily, where does this 4 hour opening price align? It aligns with this, the CE of this daily wick. Random, I know, but it just fucking does. So that's what we're gonna use. We go 1 hour. By the way, this is like a setup that I usually look for. Like, I just want as many confluences in this specific area as humanly possible. Like, I just go in, find the time frame, find the levels, blah blah blah. You know, you get the idea. So this is like maybe my most common setup, I would say, and it's pretty simple. You just find as much shit as you can, basically. Then we have this. We have the CE of this 1 hour order block. What I usually go mostly off of is the 4 hour structure. So the 4 hour order block is 35.50. So I would just put my entry at 36 just to account for like spread and just like fuckery, I guess. There. And then my stop would be like right below the lowest level. So I guess like, yeah, 5. I think I put it at like 5 points. And then just do whatever, like a 1 to 5, or I don't know. 1 to 5 is nice. Anyways, I think there's more levels. So like 30-minute, yeah, we have this order block right here. I don't remember 15-minute. There's a bunch of structure here, but you know, we got the 4 hour, we got the daily, we got the 1 hour, we got the 30-minute. Everything like aligning pretty nice, which gives me like a pretty good idea of like we should bounce here at least, you know. Yeah, 25 point TP. And it gets tagged sometime soon, like right there, and it taps the, yeah, it's like it barely doesn't tap the 4 hour opening price. This is exactly why I said 36, because sometimes it just does this bullshit where it comes like 1 tick or 2 ticks within. So yeah, you should always like account for that with like at least 2 ticks. If you want, you can do even 1 point. So yeah, and yeah, that was pretty much it. If you can do this consistently, you're like good luck losing. And this is, I would say, probably like when I go into the market, this is the first thing that I look for. Like just as many levels as I can. And if we check the 1 hour, we'll also see that we're below true day open, which is this ugly candle right there. So yeah, we're below true day open. We have a bunch of levels down here. Also, I forgot to say this, but if let's just delete all this. Actually, wait, no, I need or this is replay. Yeah, okay. We go on the daily. There's something else, and I guess I never really looked into CRT, but I guess this is what CRT is. I don't know. This is the daily bias like strategy that I use for my daily bias. Like this is super high win rate, and this trade was this trade was Tuesday, July 2nd, and if we see this Monday candle swept the previous day, wait, hold on. It swept the previous day's low, and it closed back within the previous day's range. So because Monday's candle did not close below Friday's candle low, my bias is now for Monday's high to get swept. So my bias is bullish. You guys remember we're below true day open, and yeah, we have all those levels in the same spot. So that's the trade we're gonna take. That's just something I wanted to say. If you haven't watched this like concept, please watch the video that's in the daily bias in the sauce channels or whatever it's called now. I think it's by T Trades. It's a pretty good video. He's explaining it pretty simple. But yeah, this is a pretty simple concept. I use this every fucking day for my daily bias, like the main part of my daily bias. So I recommend you guys do the same. Goodbye.
Right. Quick trade breakdown. I took a 2-point loss here because I trailed my stop way too soon. I was looking at the wrong time frame. I was looking at the 30-second and not the 1 minute, so I trailed it too soon and I got fucked. Rallied to my TP anyways. Here I took a break even. That's fair. Ended up getting stopped. Would have gone to my stop anyway. And here I took a 33-point win. This is what I posted in, I don't know, I should probably post it in key opens or rejection block, or I'll post it in both, I don't know. Anyways, the lectures that I posted, this is basically, oh my god, these executions were kind of annoying. Right. I don't know what to say, actually. I wanted to, this is the thing I said about rejection blocks is that they're kind of scary. So I wanted to see a reaction off of this. So I went to the 30-second and I got a change in state of delivery. And that's where I entered. And then my stop was here or here. I don't remember. I think it was 5 points. Entered at 62. So my stop was 67, which is above this high. And then my trailing stop got hit down here at 29. So yeah, that's Wait, I took a trade on MNQ as well. Hold on. This was a break-even trade. I shorted. I'm not gonna. I mean, this was just what was this? Oh yeah, it was like a 3-minute order block right here. This is where I entered. On this red line. I guess it's yellow. Okay. Top tick that and gave a nice reaction, so I put my stop loss to break even, and then it stopped me at break even. The reason I was trading micros is because I took a win on the N and Q, so I didn't want to really risk anymore. This trade was a 5-minute CISD. What the fuck? Oh shit! Sorry. 5-minute change in state of delivery with some engineered liquidity. And the reason I took this is not just because of this, but because of this accumulation right here. I noticed we had some untapped structure up here, so I think I targeted. Wait, let me turn this fucking shit off. Hold on. We had a 30-minute change in state of delivery and a 15-minute change in state of delivery right here, and we had not tapped into this before I took my entry, which is why I liked this entry so much. We accumulated, manipulated, and then I just wanted to see a rebalance into the 15-minute change in state of delivery. So I TP'd like 31, like right below it. Then it reacted off of that huge and sold off. But yeah, I just wanted to show you guys, like, I don't necessarily trade one specific thing. I just look to see, like, if, okay, can I get a low risk entry somewhere around here? Like, you see this top tick, I can keep a tight stop on this. This bottom tick, I can keep a tight stop on this as well. And yeah, that's pretty much just how I trade. Hopefully this was helpful. Like, you guys see that I use everything. Like, everything I know, I just have to use. If I were you guys, I would just focus on one model. Like, if it's accumulation, manipulation, distribution into a point of interest, then that would work fine. If it's the wick theory or the key open soups with a PD array, that would work fine. I'm gonna probably make like a checklist of like what I think is the best trading setup. And yeah, I'll touch more on stuff like in the risk management channels. Yeah, you're gonna overcomplicate it. That's just how it is. I did too in the beginning, but when you learn it and it clicks, it's no longer overcomplicating it. It's just knowledge, kind of. You know what I mean? So you just gotta have patience with this. You gotta just view the markets in this way. And then, like you see, I'm super aggressive with my stops. Like, when I get this huge rejection wick, like, yeah, I'm gonna put my stop loss to break even. Risk free. Just let it do whatever it's gonna do. And then stops me at break even, fine. Look for the next setup. What's the next clean setup? This accumulation into this POI. Like, it's gonna take time. Like, I struggled with this like big time when I started. It's not gonna be easy. It's gonna take time. But like, yeah, I'm gonna make this is a whole separate topic. I'm gonna touch on this in psychology. Anyways, goodbye. You are gay. Right, I'm gonna do the one from Thursday as well while I'm at it. I actually think I took 2 trades. One was like a super scalpy trade. I longed True Day Open into my main trade. This is gonna be up here at 966, right there. I'll send the executions. But anyways, I think this was just like a lower time frame kind of trade with a bias, obviously. So the main reason I took this trade, I'm gonna be dead ass. I don't even remember. But looking back at it, it was this 5-minute order block CE lining up with this 5-minute breaker. Is that even a breaker? Is that even a breaker? I mean, yeah, it is because of this big ass wick, but anyways. So 5-minute breaker, 5-minute order block CE, and then we just scale down in time frames. We got this massive 1 minute fair value gap. We draw our fib. We can see that it's like right around discount, which is good. Discount is always like a super sensitive area. So that's the long that played out. It was like a 1 to 3, nothing crazy. And then we took our main trade. We entered at 66. I don't remember the stop. It was either 5 points or 10 points. And then the take profit was, let me see. It was at the lows, down at 930. Oh my god, stop. 930 even. It was not this low, it was this low. Because we failed to take this low, so I was like, yeah, we're gonna probably go back down. Also, this move was like super aggressive, so. But yeah, mainly a 5-minute confirmation trade with the fib, obviously. Fib settings, if you guys don't have them. Stop loss, I don't remember. It was probably 10 points. Keep it like above the OTE range. And yeah. This, I actually screen recorded this trade. I'll post it on TikTok like tomorrow. But yeah, not very complicated. Not the best trade ever. Like not super clean. It's just like 5-minute confirmation really. 15-minute, we had a change in state of delivery right here. So that's also a confluence. Whenever this like happens into a, we got all this 5-minute structure inside of this 15-minute order block candle. Yeah, you don't have to overcomplicate it. You're usually gonna find a good setup. If not, you get stopped or whatever. All right, cool. I'll make the other videos later today or tomorrow, like imbalanced order blocks, all that. So yeah, bye. Right, so I wanted to quickly go over this rejection block model. This is a trade that I took today, pre-FOMC, that's kind of derived from a lot of different things. FOMC, by the way, was super fucking messy. I've never seen an FOMC that's this like slow and weird. But I also didn't listen to what he had to say, so maybe he said something weird. So anyways, right, so this is like a, I mean, it is a model, but it's also, I guess you can call it discretionary. But essentially what I was looking for here, I saw we started to consolidate like around the 10 a.m. open. And then I was like, I wanted to trade off of the 10 a.m. open, but I was low-key expecting us to do this because of this move. Like we just had a a rally the whole day. So I didn't want to just long on a closure above. Wait, where the fuck did my... Oh. On a closure above 10 a.m. So I'm still coughing and my voice is still fucking cooked. But yeah. So this is an AMD trade with a PDRA, which we have right here. It is a 1 minute fair value gap, which is also a 5 minute fair value gap. Bro, I hate that when I change time frames, it just fucking takes me to Narnia. What the fuck? Which is also a 5 minute fair value gap. Right there. Touches the 50% mark of it pretty nicely. But yeah, I use the 1 minute, and it's also a 3 minute. And what do they all have in common? We have this engineered liquidity in form of this low, but we also have like an AMD setup, right? AMD is just another type of engineered liquidity. But as soon as we like missed this fair value gap by like 1 point, I was like, okay, that's fucking suspicious. Like, we're probably gonna come back down to here. But that's not the important part. You know all of this stuff. So the reason that I wanted to make this trade breakdown was to show you the actual entry mechanism. Holy fuck. Excuse me. Ugh. Alright, I wanted to show you the actual entry mechanism. So we come down into this 1 minute fair value gap, and then we sweep that low. Wait, let me turn this shit off. That was mad annoying. Right. We sweep that low inside of that 1 minute FEG, which then leaves us with this rejection block. Let me delete the fair value gap. That leaves us with this rejection block, right? Now, for rejection blocks, you can either enter here on like the top, in this case, because it's bullish, at the top of the rejection block, or you can aim for the 50% mark, which is at 89.50. And as you guys know, I want 2 ticks of fuckery, which then had my entry right there at 21.90. Now, what's the low of this candle? It's 89.75. So tag me into the tick, pretty much. Well, and then as soon as this candle, not even closed, but as soon as this candle had that reaction, like this is one of the fastest break evens I've had in my entire life, because this was just so explosive out of this rejection block. But that's what I like about rejection blocks. If you backtest this and you actually forward test this and you execute on this, you're gonna see that rejection block, like testing a rejection block, especially like if it's inside of a PD array, like we're testing this 1 minute fair value gap at the same time we're entering this rejection block, which is like, that's the perfect way to use rejection blocks. As soon as this candle like just had that reaction, like I just saw that we left a huge wick here, I just put my stop loss to break even immediately, because I was like, okay, if we come back down here, that's probably not going to be the bottom of the move. So yeah, that's what I like about rejection blocks. Like I said in the entry mechanism video, I think I said that rejection blocks is my favorite entry to use, and it's because of this. It's just like, it's consistent and it's safe. Like I had a 4-point stop loss on this. I had my stop loss at 86. below that low. And then obviously I wanted this to just run like a low resistance run, but it didn't. So after it took this high, I trailed my stop to like 20. Because it just shot up there. I think I trailed it. I trailed it. Fuck, I don't remember. Anyways, I trailed it to 20, which is where it took me out for 30 points, which is a 1-7 RR. And this is my only trade today. If I hadn't taken that trade, I would have probably tried trading FOMC, but I'm glad I didn't, because this was fucking messy, bro. Like, we edged data high right here, and then we edged data low right here. Oh, no way, we actually took it. Barely. Damn. Right. That's what I said in the chat too. I said like data low, sweep, and then run. That's exactly what it did. But yeah, anyways. Rejection block, PD array, AMD into the PD array. You guys get the idea. Like, you want to wait for price to do something like this for you to be like, okay, this is looking a bit suspicious. We're probably going to go and do this and this, right? And what's going to give you that confidence? Engineered liquidity, AMD, and PD arrays. Like, yes, I could have entered straight in the 1 minute fair value gap, but like, what if it just railed through it, right? Because it might have wanted this one. That's why I was kind of like, waiting for confirmation. And rejection box is like one of the best confirmations there is. So yeah, I think that's pretty much it. Yeah, not really much else to comment on. Hit all-time highs today, which is kind of mid, but I'm sure we'll get some decent price action anyways. Yeah, I mean, every time we're at all-time highs, we get like kind of sketchy price action, but just long until it fails, I guess. So yeah, have a good afternoon, my niggas.
All right. A couple of you wanted me to make a trade breakdown from the trade that I took in London. What the fuck is going on? Where is my time frame thing? Bro. Oh. Okay. Anyways. So the trade that I took this morning, I don't think it was like right. Okay, so technically it was London session when my entry happened. The first thing that I was looking at was from yesterday. Is that mouse noise going to be annoying? Probably. Okay. Let's not use that then. From yesterday, we tapped into that daily bullish imbalance. And then after that, I was looking at the 4 hour. Okay, let me wait. I was looking at the 4 hour. I was marking out this wick because it stood out to me. It should have stood out to you as well. I know a couple of you guys took this because we have this 4 hour low right there, and also we swept this 4 hour low. Also, what makes this extra good is that we tapped into that daily imbalance. Now, holy fuck.
I told myself I'm not gonna trade today, so I was kind of like, okay, I'm gonna get the absolute best entry possible, and I'm gonna do micros. So that was kind of like my excuse to trade this because I thought it was really clean. After this, I saw that we were dumping pretty hard, so I went to ES, and I wanted to see an SMT at that low before I entered, which is this low right here. Wait, no. Wait, what the fuck? Wait, yeah, it is. Okay. I'm stupid. Which is this SMT right here. You can see 515, that's when the SMT happened, and then 515 is when I got my entry. So I set alerts at this low. After that alert got hit, I was like, okay, I'm gonna start looking for entries. As you guys know, when it comes to these types of setups, I want to I want to have a 10-point stop, but I didn't want to enter on this 4-hour XAUUSD because we had this decent looking 15-minute rejection block right here. The reason that it's decent looking is because we have the fib, which you guys know I love. We have the fib lining up right at our 15-minute rejection block. So that was my entry. For the guys, you guys saw my entry, it was 130. I put it 2 ticks above, as always. And then, let's see, after we made this, like after, okay, I'm gonna turn this off. After we closed above this candle, so literally, yeah, the same candle that I got tapped in on, I went break even on the same candle because we created this 1-minute change in state of delivery. So I was break even pretty early, and then as I said I wasn't gonna trade today, so I trailed my stop pretty aggressively. I trailed it to where did I trail it? I think when we took this high, and this is just like, this is not normally something I would do, but because I told myself I was not gonna trade today, I just felt stupid because I was in this trade. So after we took that high, I think I trailed my stop like, wait, no, oh, wait, never mind. I'm tweaking. This high is where I trailed my stop. Because we got, this is equal highs, and it's also a 15-minute. Oh my god, bro, I hate this fucking shit. Why the fuck does it do that? Like, no, I don't want to look at fucking Thursday price action because I changed time frames, you dumbass. It's also in a 15-minute, and we got an unfilled 15-minute right above. Like, these are just reasons that I like this trade. We created a lot of imbalances on the way down, and I was kind of imagining this buy model to getting bought back up. However, I kind of trailed my stop too aggressively. I think I trailed it to, yeah, well, I trailed it to 170, so that's 40 points of profit, which is like, that's my minimum winning day, because my average loss is like $100, $200. So my minimum winning day has to be at least equivalent to 2 losses. So I trailed my stop to 170, and I pretty much just fucked off. It ran for a bit and then stopped me out, and then eventually ran to my TP, which was London highs up here. I don't really care about it because I wasn't gonna trade today anyway, and I made like 2R, which isn't great, but I think what you guys wanted me to break down was like the entry itself, which was just, you know, the 4-hour XAUUSD in that area was a good confluence for me, and then the SMT kind of just did it for me, and then I just looked for that entry that just lined up perfectly, you know, the 15-minute rejection block with the 0.79 retracement level. It was just kind of too clean for me not to take. And then also you guys want me to make a video on trailing stops. I'm gonna make that Yeah, I'm gonna do a separate video on that. Okay. All right. Goodbye. Right. I thought I'd make this trade breakdown before the Q&A, which is in 1 hour and 30 minutes. So I think there was some. I think a lot of you guys took this trade without even seeing like my my signal or like my outlook or whatever. I think you guys just saw this as well, which is great. That's exactly what we want. That's what I'm trying to achieve with this no signal policy. Anyways, so the reason that I went half size today is because it's a no news Monday, and then the daily was bearish, right? But we tapped into a lot of bullish pieces down here, so I was like kind of 50-50 on that. And then I said in the chat that if the daily is previous day low and you're actually bullish, then look at the 4 hour and the 1 hour. So Ayo. Damn. Anyways. Yeah, I said that I wanted to see the 10 a.m. close for me to actually decide if we're going to take previous day low or not. And we have all of these new week opening gaps in this same area, which is kind of like, it's not great if we're holding above that and we're holding this 4 hour bullish imbalance. If I want to see previous day low, then that's not great, that close. So I decided to be bullish. And the higher time frame overall is still bullish, even though we had a crazy dump on Friday. So yeah, the first thing that I did when I logged onto the chart was to mark my key levels. The 1800 is obviously the same as this tiny new week opening gap that we have right here. I'll just keep it on anyways. 1800. And then, as always, we gotta mark our key open, our true open at midnight. Where is it? Right there. We'll keep that there. So, first thing I did when I logged on to the charts, I think price was somewhere around here. Yeah, we just opened. So that's gotta be about right. Oh fuck. Bro. I marked my fib, hold on. What's the first thing I did? Because I wanted to see a retrace from this move. Also, but I also like didn't want to take this because it was like right at open, which is oftentimes kind of gay, especially on the No News Monday. But down here, I noticed we had the new week opening gap, the 1800 open, and the 079 retracement level. So, I don't know why I did. How do I? Yes. So I sent it in the chat, a reaction off of 079 and NWAG would be cream if we get there. I'll put that screenshot in the chat, and then let's go on MNQ where I actually took the trade. Yeah. So I closed this really early. I closed this trade pretty early because, to be honest, I wasn't planning on trading today, but I love using new week opening gaps, especially if we get some nice structure like we just did. Like we had this order block, and then we had the fib level and the new week opening gap, so I really liked it. So I just went half size, 10-point stop, 50, I think 56 points, I think is where my final TP, or where I ended up TPing. Obviously, I could have trailed this really tight. Like if I really wanted to hold this, I would trail it here, and then here, and then here, and then here, and it would have just fucking kept holding, you know. Here, you could have just trailed and trailed and trailed. Wouldn't even have gotten stopped out up here. Trailed to there. Like you could have just fucking kept on for a good while. But the thing about this is that this does not happen very often. As you guys know, I prefer consistency over trying to catch moves like this. And the reason that I'm one of the few people on TikTok that actually show you payouts is because I'm humble enough to actually admit that I don't know that we're going to make this move. I'm bullish. My job is to find the low risk entry. And no one can know that this move is going to happen. So I would rather just take my profit for the day and fuck off. If you keep chasing these moves over and over and over and over again, in the long term, you're going to end up making less money, in my opinion. Unless you like specialize in catching low of day, high of day, blah, blah, blah. I don't do that because I'm with Apex. I can't really hold trades like that as of now. When I get a live account, I guess I will, but yeah. So the reason that I entered straight on this level was because of this bullshit that it started doing right here. Like, wait, what? Did it just... Bro. Right, fuck. Anyways. Like, it left this low, and then it had this bullshit-ass pump. And I know that it looks like it hit here on MNQ, but on NQ it did not hit. And my limits on MNQ are always based on NQ. So it swept this, which I consider in this case engineered liquidity. I enter. Put my stop loss to break even pretty soon. Like I think I put it at this low. So I had it went from a 10-point stop to a 5-point stop because I just trailed it to this low as soon as this candle closed. Just in case we wanted to tap back into the new week opening gap. And yeah, that's pretty much it. Right, so some of you wanted me to break these entries down that I took yesterday, so I'll just do that kind of in one video. Let's see. This was all today. And then, right, I'm tweaking. Nice. Right, here it is. This fucking gay ass price action. So the first entry is just this. All of the entries are rejection blocks, by the way. And the first one is just this rejection block with this engineered liquidity. The reason I just entered this blindly is because the risk was so good. So I entered 64.50 and then I had my stop at 67.50, so a 3-point stop loss. And then obviously I was aiming for these equal lows. But it tapped into the new week opening gap and stopped me at like 39 or something. I checked my stop to right here. Then after doing that, we left this, which, as you guys know, is my wick model. We left this high inside of this rejection block below the CE. On this, I could get even better risk, so I did 65.5 entry and then 67.5 again. And I think like as soon as we tapped into this bullish structure right here, we tapped into this breaker, I moved my stop loss to break even, and then obviously came up, waked me out, and then came back down. Then I took a 30-second entry. Oh shit, I gotta upgrade my shit. Oh fuck. Well, anyways. Where was it? Here. The long that I took was actually a 30-second entry. I have the 30-second on my Trade08, but not on the TradingView thing. Because I rarely trade on TradingView. I just do some charting. So I saw we had this AMD, accumulation, manipulation, distribution. Right? Where did it reverse? Boom. Fucking classic. Liquidity, PD ray, wick model, all that good stuff. And then we left a 30-second rejection block right here at 29, I think 29 even. Yeah. So I entered 29, and then my stop loss was below this low, so 26.50. So like 2.5 point stop. And then I was aiming for I think I was aiming for these highs. I think I got stopped like somewhere around here. Yeah, I was aiming for this high. This was my TP, and then it got edged, so I just trailed my shit super tight because I really want it to be done for the day. I actually hate trading. Like, it's so boring. I just want to trade, be done, and get off the chart. So I trailed it super tight. I was like, fuck this, I don't care. My risk is like fucking insane anyways. So it makes sense. So yeah, that's that pretty much. Now, the entry that I called out to you guys in the chat, that's another concept entirely. So let's see. Bro, I hate that it just moves my shit around when I just change time frames. What the fuck? So you're gonna have to go to Tuesday and then mark the, that's Monday, fuck. Oh wait, that's correct. Monday, 1800 open, and then I said we want a bullish 10 a.m. close, which we get right here, so that we close above this down closed candle, which makes this a 4-hour bullish order block. And then we also had the 50% mark of the new week opening gap right at that 906, 907 level. Oh wow, that's a bit late. Which is the level that I told you guys in the chat. I think I broke it down. I said I wanted to hit the level, and then I said I would enter on the first rejection block, which we got right here. That's the rejection block right there. So you would have entered at 908, and then your stop loss would have been 903, so 5-point stop. It's pretty decent. And then like aim for the highs, or whatever you want really. And then I saw, like, I watched the chart today and it delivered like twice again, which is pretty funny. But yeah, I think this video is about to be too long and my pizza is almost done, so goodbye. Alright, so I wanted to make a psychology video, but someone asked me to do a trade breakdown, so I guess I'll do that quickly first. Right, so coming into New York session, this was the low of day. And then I was really, I had a really strong bullish bias. See, we just take out all-time high, take out all-time high all the time. And I wasn't trying to fade that, so after we got that sweep, we had a pretty decent reaction off of that sweep. And this is no fucking voodoo. I just fucking took the first trade, or the first fair value gap that I saw, which was this. Because I just really wanted to get in on this trade. I really wanted to just take along and be done. If it lost, then whatever. But yeah, you can see we have this AMD right here down to sweep this the low of day. And then I just did the most basic trade ever. The volatility was pretty low, so I just did a stop below the fair value gaps, candle low. This is like a super basic trade. And then I added when we got to the CE of this 1 minute fair value gap. So I entered here at 502, and then I re-entered 522. In the video I posted, you'll see that my entry is averaged at 512, which is just the middle of those two entries. After I entered here, I put my stop loss to break even, which, as you can see, almost got stopped out, but I guess I was lucky. You know, this fair value gap right here saved my ass. Oops. So, yeah. I'm really not a big fan of this price action right now. It's super choppy, and yeah, especially like every AM session is just a lot of manipulation and just very choppy. So I don't like it, but it's whatever, I guess. Can't do anything about it. I would advise you guys to de-risk or just trade evals, or, you know, I bet my fucking net worth that so many people fucking lost in this price action today. Like, here, from open to like, literally the first 2 hours were just fucking chop. Then we have a move up, a move down, and then we just fucking keep chopping. So, alright, I think I'm going to make the psychology video a separate video. So, yeah. But as I said in the AMA, for those of you who watched it, my bias is going to be bullish pretty much every day until we get like a actual 4-hour displacement. Like, I'm talking like 300, 400, 500 points maybe. Like when we start invalidating all of this, then yeah. But today is December 6th. I'm not expecting a lot from the market in these next 3 weeks. So de-risk, trade fewer accounts. I'm not trading my whole 14 accounts right now. I'm trading separate accounts, or trading evals, or trading just smaller groups of accounts. Micros, testing stuff, blah blah blah. So yeah, I'm pretty risk off, and I advise you guys to do the same. Alright, I'll make the psychology video. Okay, this is going to be a video on data highs and lows. This was CPI on Thursday. Usually we have better price action on news days than this. This was just absolutely atrocious. Anyways, what you usually want to do with data highs and lows, for those of you not familiar, is whichever side we take first, we're gonna go for that other opposing liquidity pool. So if we take data low first, we're gonna have a clear draw at data highs. And for those of you familiar with this, I'm gonna use data highs and lows for something else as well. So just, if you're familiar with all this, just keep watching, because there's some more sauce coming. I noticed also on Thursday we had the 10 a.m. open was just absolutely, I think I had a limit like to soup this low, and it just fucking edged the shit out of me. But yeah, 10 a.m. got like souped right here. And the reason this was a good trade is because of what I'm going to talk about later. So firstly, I'm going to explain this. Obviously, this is just, if you tried taking the first entry after the data high got swept yesterday, yesterday, you would have gotten fucked because of this fucking bitch ass price action, whatever this is. I think PPI today was a bit cleaner. Let me just find it. Right here. It was a lot cleaner actually. So we made a data low and data high, and here we made like equal lows as well. So this was like super obvious. We put in the data high, and you can see like we sweep it just immediately. Another voice crack, nice. I think like for this, usually price action is like really fast, so you can use the 30-second or even the 15-second, whatever you feel like doing. But like after this got swept, this was super obvious, these equal lows and the data low. So like you could have just taken the first 30-second chain of state delivery right here, 10-point stop, target data low for a 1 to 4, 40 points. That's decent. Oh my god, where did it go? Oh. So yeah, that's pretty much. I mean, you can use inverse for value gaps, whatever you want actually after the data high gets swept, but just know that data low most likely is going to be the next draw. So that's why I like trading news days, because the draw and liquidity is pretty much free, like the bias, except for CPI on Thursday because price action was cancer. But yeah, the other thing that I use data highs and lows for is I use them as points of control. If you don't know what that is, or otherwise known as POC, it's just like data highs and lows. They're not like normal highs and lows. There's like, I really don't know the actual technical part of it because I'm not a fucking nerd. I just know that you can use them for like entries after they've been swept. So like you can, okay, 15 was bad. Let me check 5. Like you see this, right? That white line is the data high. Like you see how we constantly just tap it and go, soup this. We might have even gotten a week C entry. No, got edged, whatever. This was after close, but yeah, you get the point. So like if you get a strong close above it, you can basically use it as like a key open, if that makes sense. Let me show you on CPI. I think it was pretty, it did some shit there as well. And obviously the 8:30 open, key open, it's also nice when you have news at 8:30. Like it might do. So we sweep data low. As we know, we're going to wait for data highs. We're not going to actually use this as a short. You could have use it as a short for like a small scalp or whatever, but I would never do that if data high is untapped. But here you see we sweep data highs, come back down, tap 830, but only use 830 if there's news days, like some decent news. CPI, PPI, NFP, usually the best days to use 830. But yeah, you can see here as well, you can use the actual data high and low wicks as key opens. They're not key opens, but you would use them in the same way. So this one lined up at 10 a.m. right? 10 a.m. we, as I showed you earlier, is right here. That's 10 a.m. and it's also right at the data low. You can soup that. Also with that little tiny 1 minute rejection block. Yeah, that's basically just how I use data highs and lows. You can also use, sometimes if they leave a big wick or like a decent sized wick on the 15 minute, you can use the 50% mark of that for an entry. If it leaves the engineered liquidity, like I explained in the weak theory video, that engineered liquidity is like the absolute most important criteria to be able to enter on a 50% on a wick. Like that's the whole trade idea, is based on the liquidity being there. So if you just try to enter on every 50% of every wick, you're gonna get murked. So don't do that. Yeah, just let me know if you guys have any questions related to this. Goodbye.
I think this was the... I'm gonna do 2 in 1 because they're essentially the same trade. So this was from Friday, so obviously my executions are gone, but I'm gonna slap it on here, the video or the screenshot or whatever I'm allowed to do. And I'm gonna put this in the XAUUSD order block theory channel. So yeah, I think everyone is familiar with the AMD, accumulation, manipulation, distribution. We have this. Can I wait? Hold on. Do I? Give me a second. Okay. Whoa, that's way too big. So, for those who don't know, how the fuck do you spell accumulation? Okay, I don't know. Anyways, this is our accumulation. This is a range. This is consolidation, whatever you want to call it. Now, we're extremely bearish. And old me would have tried to actually long this for a rebalance. We have a pretty fat rebalance here. Huge manipulation leg. Just get fucking ran. So I'm going to be short biased on this. And I took this trade, so this is not hindsight. But I just saw we had this little 1 minute order block right above this range at 497.25. So what I wanted to see was if it could let me... Oh, fuck. How do I... Where's that thing? Nope. Is it here? Bro, what the fuck? Alright, so I'm extremely dumb. Here, okay. Fuck. So I wanted to see a manipulation up above these highs, because I was bearish, so I want to catch the manipulation leg, and then catch the shorts down. Oh my... No, stop. Oh my god. Please stop. Okay. Anyways. So I just placed short limits. I didn't want to see any more confirmation. Because the thing about how I trade is, for me, the confirmation is to the left of the chart. I don't need to see another change in state delivery or a fair value gap after we tap into this, because it just looks so obvious. So I wanted to see, right, that's where we got in at, I think I put my limit at 97. We have this accumulation. Now we have this manipulation. I'm gonna remove this because it's in the fucking way. Wait, can I? There has to be another way to do this. Hold on. I just want to make it kind of easy to see for those of you who are kind of new. So we have this accumulation. Now we have this distribution. No, sorry. This manipulation. This tall box. And then I want to see the distribution now deliver us to the downside. Like this. This is an AMD. AMD. Alright? So I got in. As I said, I'm going to slap the execution on here. For those of you who didn't see it when I sent it in the chat. This is the model. This is a clean model. I love this model. AMD with into a PD array. Classic model. I don't remember where my TP was. I was probably like 50 points at the bottom of this range, these lows. So yeah, I'm gonna smack the execution on here. And then the next trade I think was around in power hour. I'm gonna do these in one video because they're essentially the same model. I think I took this on the 5-minute though. Okay, let's. Hopefully all that shit made sense. The only thing that's not great about this trade is that we're in a daily discount level, so we're shorting in discount. That's why it's not A+, but it still worked out. Let's see how this plays out. I think this was like the exact same setup, just on the 5-minute, and I think I took the CE of this 5-minute order block. Like probably right there. I'm gonna slap the execution on this one as well. My stop was not that big, surely. I actually don't remember how big my stop was. I think I did micros on this, so maybe it was like 15 points. I'm gonna have to check that. But yeah, if we scale down to the 1-minute, I think we start accumulating here. Yeah, we have this accumulation, right? So same thing. Oh shit. Accumulation into this 5-minute, 50% mark of this 5-minute. And then my stop was probably like right above the 20 or 75% mark. So yeah, maybe it was 10 points. Edged my stop loss. So the 25% mark would have been this. So yeah, it was 10 points right above that 25% mark. And then I don't remember what my target was. It was probably like, I think I did micros again. So it was probably like something like this. I don't remember. I think this ran way further, but yeah. I'm gonna have to slap the executions on both of them. Actually, might have been smaller. Might have been like this. I don't know. I'll put the executions on there. But same setup: accumulation, manipulation, distribution into a PD array. So this is a model. If you want to like use one model, this is probably one of the simplest, easiest models to use, and it's very effective. So yeah, again, we're in a daily discount level, so shorting and discount, not great, not A+, but yeah, it's just it is what it is. We were so bearish, I didn't think we were gonna get that far up. Shit just fucking dumped all day, so yeah. Exactly. So yeah, that was those two, same setup. I'm gonna do the trade that I did yesterday, the 921 that I called out in the premium chat before CPI. So yeah. Right, so I'm gonna show you another example using the 10 a.m. open. This was on Thursday, so yeah, Thursday this week. So first thing we're gonna see, and I'm gonna cover this in the top-down analysis, but this is basically like a top-down analysis trade. So this is, in my opinion, a pretty good video to watch. It's gonna be like, it's gonna cover the PXL, PXH concept, key open, and change in state of delivery all in one. Plus, we got some sauce down here that I haven't talked about yet. But yeah, so you guys see, let's go on the 1 hour. We sweep, actually we can't see shit on the 1 hour. We sweep the previous day's high. Then we immediately have this inducement leg down. And for those of you who don't know inducement, it's just like a fake move, like manipulation move to create stop orders up here to then sweep and, you know, do its thing. So we have this inducement, which is, I mean, this is 8:30s. We got like 1 hour and 30 minutes until we got the 10 a.m. open. So we're not going to touch this inducement anyway. And price rarely soup daily highs and lows like this, unless there's like a huge level right above, and then just go down. It's usually like, it does a lot of fuckery before. Like if you see this, it's going to fuck around, manipulate, accumulate, blah, 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 sweep out both sides, all that shit. And then bro, can I? Right. And then we re-sweep, and we sweep pretty significantly as well, which is something you want to see. We have this untouched data low down here, so that's going to be our bias. I obviously haven't made a data low and high video yet, but data highs and lows are just, they're special because they're like Newswicks, bro. I don't even know why they're special. They just fucking work. I read something about it once, like there's something's programmed and blah blah blah, and it's like engineered liquidity basically. Anyways, we get this change in state of delivery on the 30-minute and on the 15-minute, yeah, right here, which is also the 9 a.m. open-ish. So we want to see a retracement back into there. We still, at this point, have not gotten our 10 a.m. open. But that's going to be like real soon. I think that's 10 a.m. open. And it taps into this, which is the change in state of delivery, and it rejects pretty hard. And we get that strong close below the 10 a.m. open. which I talked about in the last video, and we also get this inversion without taking this low, and most importantly, without taking the data low. There's a bunch of engineered liquidity, like this is all just low resistance liquidity, which is going to get taken out. But for this trade, you're basically just going to target data low, because that's all we need. There's no need to get greedy with this. So that's 77.5, 2 ticks of fuckery. Then we do 5 point stop. TP at data lows. That's a 1 to 8. That's fucking... Oh my god, please. There we go. 1 to 8. That's more than we could ever ask for. Does not take that low. That's important. If it took that low, you could still target data lows if you got this entry, but it's just going to be lower probability. Taps into the tick at the 10 a.m. open in this 1 minute inverse, and just basically, yeah, I think this went like a lot further. Yeah, so if you want to catch like huge expansions, you can also do that. Just basically when it hits this, put your stop loss to break even, or trail it to like a 1 to 3 and do like risk free, or even like you're in the money if you get stopped, if you just want to like hold for an expansion move, because this fucking went, bro. This shit just went. Or just scale out if you're in more than one con, blah blah blah. You guys know that stuff. Basically just targeting all this low resistance liquidity. I think there was some equal lows somewhere around here too, yeah. So holy fuck, bro. Holy fuck. Right, yeah. Anyways, that was just a example of how to use everything kind of in accordance with each other. You got the previous day high swept, you got your manipulation, accumulation, distribution, blah blah blah. You got your change in state of delivery. Then if you're just like, if you're patient, I know a lot of you guys trade like right at market open, which is when, like, I think I even traded this bullshit right here. I think I got stopped in this bullshit trying to catch the data low. While in reality, I should have just waited for the change in state of delivery to happen, and this exact setup right here. Yeah, I think even I got stopped in this bullshit. I think this wicked fucking stopped me out. So yeah, patience is something even I have to practice. I'm just teaching you guys the technicals that I've like watched over a long period of time, just watching the price for hours and hours and hours. Like, I'm seeing this shit just like tick and move. We gotta take advantage of that, but I'm not gonna sit here and pretend like I have perfect psychology and a perfect mentality, and that I don't at all, bro. Like, I'm impatient as fuck when it comes to trading sometimes, and I want to revenge trade a lot, and I want to overtrade. I want to over leverage when price stops me out like this and goes in my direction, but we can't. We just fucking can't. But yeah, that was a holy yap attack. I'm gonna move on to the next video. Goodbye.
Right. While that other video is uploading, want to make it quick. Wait, what the fuck? Why am I offline, dude? Look at this. What the fuck? All right. I want to make a quick video on what I do like every day when I go into the market. Just like the first thing I do. So first thing I do is check daily. We swept daily highs, we swept all-time highs, like for this example, which is kind of cooked. That sets me up kind of like being very cautious going into the day. Then what else I look for is like, wait, can I use like text on the, nice. So I can actually write this in the chat, I guess. But number one, PXL, PXH. That's like the first thing I do. Because if we haven't, and like the daily buys lines up, that's easy daily buys. Like, then what else I look for is I mark my key opens. Just mark them so you've done it, and then boom. Number three, equal highs, equal lows without SMT. Because if there's equal lows but there's SMT at that low, then that's kind of mid. So you want equal highs, equal lows without SMT for them to be like valid. And then I look for higher time frame market maker models. This was kind of annoying. Hold on. I guess OCD. Market maker models. And then last, I look for 4-hour and 1-hour changes in state of delivery. I could have actually just made this. Oh fuck, whatever. So first of all, we check daily, fine. Then, like, easiest thing in the world, just mark your key opens. Do that every day. That's midnight. The pink one is midnight, and then and then the yellow one is 10 a.m. and that's it for key opens. And then you want to look at 1-hour PD arrays, 5-minute market maker models, or just 5-minute market maker models in general, 3-minute, 1-minute, all that stuff. That was a really quick video just while the other one is uploading, but yeah, I'm gonna make more videos on this. But you guys already have like the daily or the top-down analysis video. Like, it's similar to this. This is just like what I do. The first thing I do, mechanical, every day when I open the chart. So yeah.
So this is gonna be a video on how to use the key opens. And the key opens that I like to use is the 1800 opening, the midnight open, and the 10 a.m. Hourly candle open. So first of all, you gotta, everything we use with these levels has to be in context, first of all. So you do your top-down analysis, which I'm gonna also make a video on today, and put that in the top-down analysis channel. But yeah, let's just get into it. So this is like one of the first things that I do when I log onto the chart. I mark these levels, especially the 1800 and the midnight open. Obviously the 10 a.m. comes later. I log onto the charts like 9 a.m. so I gotta wait for this one, but yeah, anyways. The most important thing to, I guess, remember with these levels is, how do I put this? Like from April to maybe like mid-July, you could soup these levels without too much context. However, it's kind of stopped working. Like, you see, like, it gets ran through right here because you don't have the proper context. Like in May, June, July-ish, this would probably have given a bigger reaction, like to actually take a proper trade off of. But here you see it gets ran because we have this target down here. So I know some of you guys actually sent this level in the Discord, the 617, which is the new day opening gap as well as the new week opening gap. This small one is the new day opening gap, and you see like the CE, the 50% mark, lines up perfectly, which I agree is a fucking good level. However, it did not get there fully. So when you have two levels on top of each other like this is just bound to happen. like it tapped into the new day opening gap. I think it tapped the, let's see, I think we probably tapped like the 25% to the tick. Yeah. It taps the 25% mark to the tick. Doesn't even give us the 1800 open, which is like, it's frustrating because you would have caught like like a huge expansion move, like 200 points. Yeah, like exactly 200 points. Which is like, yeah, fuck. That's frustrating as fuck. But this stuff happens all the time. We see it happen all the time. So you just gotta, don't let it frustrate you. Just know that like you called the bottom. You didn't catch the bottom. You called the bottom, which is already absolutely insane. So we gotta just stay level-headed when that happens. Because trust me, it's gonna happen a million more times. So yeah, I'm just saying, like, don't put too much frustration into it. Yeah, okay, so for these levels, you want to see, basically what I look for now is like, you kind of use it as a, it's not a market structure shift, but like you want to see a strong candle close above that level. So here you can see that we rally above it, and then we come down, and we also have this engineered liquidity right here, which is a beautiful low. And then you can look to actually soup the midnight open. The reason this one is good is because we have this 1 minute FEG, the low of it, which you guys know I love. I don't remember if there's anything else there. There probably is. Oh my god, bro. Right, not much else, like this wick. And maybe there's like a wick CE. Yeah, no, the wick CE like kind of lines up with the fair value gap. But anyways, I would look to soup that. Oh wait, I just got a fucking ton of messages. Alright, never mind. So I would look to soup that. Oh, bro, where the fuck did it go? Okay. Yeah. Soup the midnight open. The reason okay, I'm gonna go more into detail about this. This is kind of advanced. But let's like look at this, for example. This is the 10 a.m. open. They behave like similarly to each other. Like, these are just the most important opens that you can like basically soup, or just know that like this fair value gap is going to hold because we have this level right above, things like that. Because you see, like I said in the beginning, you need context with everything. So at open, we have this big Judas up, right? And then we have the distribution to the downside to hit this level. You guys knew this was going to be the draw. And that's why I guess you wouldn't short this. That's why you don't short this when it comes back to it after this strong close. Because we hit the draw, so you're now bullish. We get a nice rally above it again. Comes down, taps into the PD array that's like right below our level. So in this scenario, you wouldn't enter on the line. You would like enter on the closest PD array. And then you see we get a nice rally from this fair value gap from like 750 to, yes, you could have caught like almost 70 points. And like it reverses in this, yeah, exactly. Reverses exactly in this up close candle. And if you guys watch the other videos, you should know that up close candles should support price going lower. So you would have caught this. Your TP would have been here. And let's just say your stop loss was like below the CE of this fair value gap, and your TP was here. as a 1 to 4. Pretty decent. We want to do this shit consistently, and this lets us do that. So we get another chance to soup this level in this fair value gap. Oh my god, bro. Hold on. Here we see we get another chance to soup this. We get a strong close below it. We inverse a ton of 1 minute FxGs, which is obviously going to be bearish. We have a market structure shift. For those of you that care about that, I personally don't give a flying fuck. But yeah, so like, which makes this a high probability fair value gap. You could have shorted this this one too. I'm not saying that you couldn't, but it would have been a loss. Let's say I usually do like 10-point stops, and then if it gives me a reaction, I would just trail it to 5 and then trail it to break even. This would have been a loss. I'm not gonna sit here and pretend like it's 100% win rate. It's definitely not. But it's gonna give you a very good RR most of the time. If you see here, like if you soup this level, you could have gotten away with like a 5-point stop and just targeted, let's say you target true day open or midnight open. That's 90 points. That's a 1 to 17. Like if you lose 15 of these trades in a row, which you're not going to do, but let's say you do, let's like look at this one as well. This one you could have gotten away with a 5-point stop as well, and just let's say you targeted, yeah, like same shit, 1 to 17, or target this high, or target like whatever the fuck you want to target, or just do a 1 to 3, you know, that's 15 points, whatever you want to do. So if you can find like good context with these key opens, you're fucking set, bro. Like the videos that I post in here, like they're a model in and of itself. So if you want to focus on one thing, whether it's XAUUSD or whether it's key opens, whatever it is, you see these key opens, you can get away with like tiny stops if you use it in the right context. And the CEs as well, you can do the same thing, 5-point stops at the XAUUSD, and you can catch like huge expansions. So this is just like, you gotta, if you stick to it, that's the thing. I'm getting bombarded with messages. But yeah, I think that's pretty much it. I feel like this is pretty advanced, so I'm gonna make more videos on this. And please just ask me questions about this. But the number one thing here is like context, like with everything else, obviously, and then PD raise. In this case, context would have been this. This is the draw. We're now bullish. Strong close above, comes back down into this 1 minute FxG, sweeps this engineered liquidity. After time, your eyes are gonna like just see like, okay, this is a good setup. I can take this. I can soup this. And this as well. Just strong close, FxG, soup the fuck out of this. Keep your risk tight, because we see that it's gonna, oftentimes it does this shit. Like it just ticks and then goes. And here as well, you see where we like reverse. It's in this new week opening gap, new day opening gap area. And you see again, after that's hit, we come up, strong close above, ticks this level. You can do a 5-point stop again, another 17 RR. Why wouldn't you do this? You could do that, it would have been a loss. But yeah, we have this liquidity down here, which is like, we have this fucking rally to the downside. and we have this unfilled area right here and this engineered liquidity. So when you get like good at this, you're gonna see, okay, this is a good setup, this is a bad setup. It's gonna be very easy to tell them apart. Because yeah, once again, like this context, this got hit, we're now bullish, strong close, boom. Get it? Like, I'm gonna do more videos about this, but yeah, that's just, if you do 5-point stops and big TPs, your win rate is gonna take a hit no matter what you do. But this I've found to be like pretty consistent. And this is actually like the concepts and the levels that probably made me the most money. If you guys look at my older TikToks, my yellow lines and my pink lines are always like midnight open. Or the green lines is 1800. I just never kind of write this. But yeah, that's pretty much it for that. I'm gonna make more videos, and please ask questions about this. It's pretty straightforward if you know what you're doing, but if you're new, it's pretty advanced. So yeah, okay, I'm gonna stop yapping. Goodbye.
Right, so this is kind of a mix between key opens and rejection blocks. So in the key open video, I told you guys about midnight open, 10 a.m. open, daily open. I think those were the three that I talked about the most. Anyways, there are more key opens, like 8:30 if there's news at 8:30. If there's not news at 8:30, then that open won't really do much. And then 9:30 every day is a key open. I would just mark these on my chart every day and just see how price behaves to them. If they line up with any PD rays, you can just soup them, etc. 1300 or 1 p.m. is also a decent key open because that's when lunch hours and PM session begins. And I posted the rejection block video before this one, so you guys know by now that this is a rejection block. We actually rejected on this initial candle right here. And this is also like above 1 p.m. open. So 1 p.m. open is essentially gonna act like a discount kind of for PM session, like in the same way as like 9 a.m. or 9:30 a.m. will act as a discount in AM session. So hopefully that made sense. Anyways, like I said, like these rejection block entries, they're gonna be so fucking scary because you might think that we're gonna come up and sweep this. But wicks are really, really powerful. I want you guys to understand this. You can use wicks a lot and get like way better risk to rewards than you normally would using order blocks or fair value gaps. Now, the ideal scenario for this trade is if there was an SMT right here. I don't know if there was. This was like 111. Right. Wait, the fuck? 1259. So the 1259 high. Right, so they just look fucking different. Anyways, 111, there's no like SMT with the 1259 high. So it's not really the best trade. It's just, I just wanted to show you guys the concept of how to soup these key opens and mixing it with like rejection block, SMTs. You guys get the idea. I think, yeah, I think I'm just gonna pump out videos like when I think of stuff to say. I guess is the best way to do it. Here you can see a good example of the wick theory thing playing out. It also played out up here. We have this high right below the wick CE. Enter at CE, stop above the wick. We're above the PM open. So yeah, I just want you guys to kind of, this is going to take time. Like, I've been viewing the market like this for a while. So for me, it's kind of easy to see. You can literally use anything, and as long as you have good risk management. But like, this is just gonna give you an edge that's gonna make that so much easier to obtain. Like, obviously, you can use support and resistance and be profitable, or supply and demand. But like, the risk to rewards that you can get with this is just, yeah, I mean, this kind of looks like a support and resistance trade though, but anyways. Yeah. I'll do the psychology stuff later. And you guys are gay, so goodbye.
Alright, so I thought I would touch on the rejection block concept. I think I sent a link to an ICT video. But yeah, that's pretty much it. So I traded pre-market today, and there was a nice rejection block entry right here, where we have this built up liquidity in these highs. So I don't know if you guys watched the rejection block video. Some of you probably did, some of you probably didn't. But anyways, what a rejection block is just the start of a wick. Like you see how we sweep these highs, and then we have this huge rejection wick. This is a rejection block. I guess you can call it a rejection wick or whatever the fuck you want to call it. But anyways, we have a rejection, and then price comes back up to like test the like the start of the wick. Sometimes it touches CE, sometimes it just touches the start of the wick. So what I posted in wick theory is basically just you're only focusing on the CE of the rejection block, and you want some engineered liquidity right below CE that would like classify as a good trade in that scenario. So you see how we touch into the beginning of this wick. What else do we have here? We have our fib right there. This is like some people call it optimal trade entry or OTE. Some people call it the like golden pocket or whatever. It's basically just the 0.62 up to the 0.79 area. Is like considered the golden pocket. So if you have a PDOA in interest in this area, just kind of makes it higher probability. So why is rejection blocks good? Well, they give you really, really good risk to reward ratios. This wick is pretty big, so it would have been like an average risk to reward, nothing crazy. But it does this even though the wicks are like small, which is why maybe this is not the best example, but like you're getting a very discounted entry, or like a very premium entry in this case. So if you wanted to short this, you also have this change in step delivery. And why wouldn't you take this? Well, if you want your stop to be above the high, your stop would have been 20 points. So this is basically, you can't know if price is going to react to the order block or the rejection block.
you're just gonna have to kind of go off of what am I willing to risk. Obviously, you're gonna get a better entry with the rejection block. You're gonna see this happening on every time frame, like 15-second up to the 4-hour. I think there was a 1-hour scenario as well, and during pre-market. Yeah, right here. This was before news and before market open and all that. You see, we respect this rejection block. It's essentially just the opening price of this candle. 3 a.m. candle, which is also the start of the wick. It's a pretty simple concept to understand, but the reason that it's so good, and I don't remember the name of the guy who said this, but he said if the trade you're looking to take and you think it's going to be a simple trade, you're about to get fucked. And the reason I like rejection blocks is that they're so scary to enter off of, because price looks like so bro, what the fuck? Oh my god, bro. It looks so scary, like price is coming up here with this huge green dildo candle. You don't want to enter shorts, but it's just like a manipulation move. Essentially, it's just like, oh, I'm so bad at explaining this, but the more premium or discount your entry is going to be, obviously you're going to get a higher risk reward. And the rejection block is like, it's scaring all of the, let's say they soup this. I mean, it's kind of hard to assume that someone souped this and just assume their psychology, but a lot of people, and I used to be like this as well, will just close their position if they see that it moves against them. Like, let's say this is literally something I would do back when I started trading. They would soup these highs. Let's call it me. I would soup these highs. I would get this nice reaction, right? My TP maybe would have been like further down. Get this nice reaction, and then I start seeing, oh shit, it's moving back up to my break even. My stop loss is up here. I don't want to lose. I'm just going to close this. It's probably going to go up there. This is just a wick, you know. This is not blah blah blah. This is not a real PD array. That's how I used to think. So I would just close it like at the top right here. I would close it right here, and then it would just fucking rip down. So idiots like me, or how I used to be, like if you can kind of tailor your trading to do the opposite of what they're doing, then you're gonna do pretty good. And the same guy that said that if you're looking to take a trade and it looks easy, you're gonna get fucked, he also said something along the lines of like, the best trade is the scariest trade, or whatever. And that's why I like rejection blocks. You can use like rejection blocks on the 15-second, 1 hour, whatever. If you get like a change in state of delivery, it could like go all the way back down to the rejection block and then give your entry, and then you would just put it below the wick, right? I don't know if I can find a 15-second example that's clean, but yeah. Anyways, that's pretty much how I use rejection blocks. If you want to, I would say the best way to use them is like it taps into your POI, your like point of interest, your PD array, your area of interest, and it just kind of, you wait for it to come back down, retest the rejection block, and then go up, and then you just put your stop below the wick that it made. You can either use the CE or the 50%, or you can just enter on the beginning of the wick. That's kind of up to you. If you want to make sure that you get an entry, then put it at the beginning of the wick. If the risk is too much, then put it at the CE. Yeah, I guess you get the idea. Yeah, that's how I use rejection blocks. I felt like I was bad at explaining this, but I'll make a separate video, I guess, if I remember anything else to say. But yeah, that's pretty much it. Like, this is rejection block, but it's fucking huge. See how we tap back into the wick? Obviously, you would just have to do a random stop, because you can't put your stop all the way down here. That would be like an 80-point stop. So you gotta know how to use it, when to use it. Like this would be a nice rejection block entry. If you took this, entered here, stop below here, etc., etc. Usually you want a sweep, or for it to tap into something. So here, it swept 3 equal lows, rejected, rallied, came back, tested the rejection block, and rallied again.